Instagram at OneMic Show. We are also going to be taking live calls tonight at 202-683-4570. Press star 5 to speak. I want you to write down that number. The number is 202-683-4570. Press star 5 to speak. Now, do you sometimes get confused by economic jargon on the headlines with words like monetary policy, Fed's funds rate, quantitative easing, amongst a lot of other confusing verbiage? Now, tonight, our guest, a commercial banker by trade, will help us understand how these terms impact our bottom line. He'll then tell us what not to do when your 401k retirement account are melting away. Now, feel free to start dropping comments in the section below and let us know what you think and where you are tuned in from. Please start typing below. Na bila kusahau, tumekuwa tukipokea mziki toka DJ wetu, machachari, mleta habari, DJ OmoshFaya, na tutadunda kule viwanjani na Micah jezi yake nambari 7 mgongoni, akituletea habari za michezo. Na moja kwa moja toka Kilimanjaro Studios ni mimi mtangazaji na mwanahabari wako mpendwa Ali Badawy. Kwetu wananiita mteule na wengine mniite mjukuu yule wa Masai. Because I'm Kenyan by blood, American by design, Masai by choice. Sichagui, sikagui, na sibagui. Karibuni.
Now, let's talk politics.
Now, this hour we'll be talking to the VP of Commercial Banking at the Harbor Bank of Maryland, Mr. Mwaura Muroki. Now, Mwaura will talk about the opportunities and what to watch out for in the Trump 2.0 economy. He will then talk about tariffs, trade wars, recessions and the effects. Mwaura will also tell us whether to buy or not to buy a home in this volatile environment. So please drop a comment and tell us where you're tuned in from. I can see already people are already in the building. I'm your host and producer Ali Badawy, and it is Friday the 18th of April. We are streaming live from Kilimanjaro Studios outside Washington, D.C. Now please remember to follow the OneMic Show on Facebook, Instagram, YouTube, and we're also now on TikTok. And on panel with me is Mr. Micah Makawa. Our resident DJ is OmoshFaya, who's been on the decks. Micah will be joining us via Zoom. And not forgetting that super producer is none other than Mubelwa Wabandio. Now, before we get started, I can see, like a couple of people already tuned in. Esther Mulusa all the way from North Carolina, Karibu Sana. I can see Luis Moya is already tuned in. Stephen Batty all the way from Dallas, Texas. Karibu Sana, Stephen. And then I can see Rachel Macharia also tuned in. Asema, let's go, Karibu Sana. And John Opondo. Karibu Sana to the OneMic Show, Mr. John Opondo, Exchangerian. Yes, Stephen Batty, of course, Dallas Massive, Texas, always in the building. Let us know where you're tuned in from. Please drop a comment and let us know. Let us know what you want to know today and what you think about the conversations that we've been highlighting that we're going to talk about. Evie Karanja, all the way from the LBC, is tuned in. Evie Karanja,
LBC ni
LBC.
Lower Briggs Chania.
Hey.
Lower Kabete with a B.
No, that's a true LBC.
Kana Barigo, Lake Baringo County.
No, man, you guys are good at coming up with stuff, but that's a true LBC, the one that Snoop Dogg sings about.
Lake Baringo County.
No, the Snoop Dogg doesn't sing about Lake Baringo County. Those who know, they know.
To Nairobi West.
Yeah, those who know, they know. No, the cool kids.
Murder was a case.
That one. Ashio. No, sawa.
Oh, wow. And John Opondo is tuned in from Tokyo, Japan.
Konnichiwa.
Yeah.
Arigato.
By the way, John Opondo speaks Japanese.
Konnichiwa.
Yes.
No.
Yeah.
It's just greetings. Konnichiwa.
Yeah.
Arigato.
That's not Sava bien.
Yeah. Uno Mike knows one word in every language. In Luo, he knows kanyo. I've always wanted that. That's the only word he can. He can use that to create a whole conversation.
Excuse me.
Yeah.
I know Jaber.
Okay.
You know what Jaber is?
And maybe that one. Yeah.
Jaber.
Yeah. Okay. All right. And then Jimmy Okangi, all the way from Dallas, Texas. Jimmy Okangi, Karibu Sana. Texas is always representing in the building. One day we have to do a live show in Texas.
I'm in on that one.
Unasikia huko sijui Nyeri by way of Virginia.
Okay. All right. Nyeri by way of Virginia. Recho Masharia.
Makaraya.
Makaraya. That's the American version.
That is the
you say much earlier.
Okay.
Mash
Aria. Mash Aria. Okay. Aya, sawa.
Shiko, greetings.
Before we get distracted.
How is that, Shiko?
Yeah. So before we get distracted.
Yes.
Sorry.
Before we get distracted, let's get started.
Yes.
Now, tonight, I want all the ladies and gentlemen to buckle up because the show is going to be a masterclass in money, power, and policy. From skyrocketing housing costs to shrinking 401ks, we also have had multiple job layoffs around us and unpredictable tariffs. Millions of Americans are feeling the squeeze, and Kenyans, both home and abroad, are not exempt. But here's the thing. Economic jargon on mainstream news barely scratches the surface for most people. So tonight, we are putting the spotlight on Trump's economy, what it means for your wallet, your future, and even your folks back in Kenya. We'll break down everything, including how inflation and Fed policy are eating into your paycheck, what tariffs and trade wars mean for jobs, mortgages, and investments, and how economic chaos in the US could shake Kenya's economy, especially with remittances and aid that's on the line. To help us break it all down is a man who doesn't read markets. He just doesn't read markets. He's helped people navigate them for over 20 years. A veteran in commercial banking, real estate lending, auto and business financing, and someone who knows firsthand how the stock market, policy shifts, and global trade ripple through the everyday economy. He's the Vice President of Commercial Lending at the Harbour Bank of Maryland, a straight-shooting and deeply insightful Kenyan-American voice in finance. Mwaura Muroki, karibu sana to the OneMic show. How are you doing today?
You know,
Your intro.
what?
Your intro ni mwaki.
I didn't even know it was me.
Ah, okay.
Let me tell you.
You know, maybe we should use this for his next speech at work.
You know, by the way, you're right.
Yeah.
And the way that, let me tell you, it's an experience, and thank you guys so much. From Ali, DJ, OneMic, thank you guys so much for having me. And, you know, there are different conversations that we can have, right? And there's a lot of topics that everybody wants to look at and to say, hey, by the way.
Well, he didn't know that you were there, sir.
No, he didn't know.
Yeah, he didn't know you were there.
Yeah, Micah is complaining. Put your headphones
Yeah.
on. They'll usikize.
Yeah.
Oh, my bad, Micah. And
Yeah, and
Arrange
put
for
your
him.
headphones
Arrange
right.
for him the
Arrange
other
the
one.
headphones for him.
Arrange the other
other headphone. Yeah, that one right there.
how?
Okay, there you go. There
Okay,
you go.
Micah, Ibu say something in English with a roar.
Kwani mimi ni matomoko ndio umeniruka.
Hey, Micah, and thanks to
Ako na
Micah, because
headphones,
Micah is the one who put this together. Micah called me and he's like, hey, by the way, what can we talk about? You know, there's difficulties, so we're going to make this something that's going to be fluid. It's not going to be a question and answer, right? It's going to be what's happening and why is it happening and what impact does it have to the regular Mwananchi.
Okay.
Right, and it took me a long time to figure out how to spell Mwananchi, but I figured it out.
Okay, you figured it out. Okay.
This guy is speaking like a Mwana's cousin, eh?
Okay,
You
sawa
hear the
sawa.
way he's speaking?
Yes, I hear how he's
Yeah,
speaking.
okay.
Now, Mwaura, how did you, first of all, you have over 20, is it 20 or 25 years?
I'm 25 this
Oh,
year.
you have over 25 years experience
Yeah.
in commercial banking. You know, like how have you survived banking for that long? And you're talking to someone who was in the industry for at least 15 years, but
6
now
months.
you've been there for close to 25 years. How have you survived in that industry with all the ebbs and flows and the ups and downs?
So you know, and thank you for asking that question.
Yes.
Real good question. So when I first started working in banking was in 2001, which was a financial crisis.
Yes, it was the bubble.
The bubble,
Yeah.
the tech bubble,
yeah.
the tech bubble just hit, and we were hit with questions, and we didn't know how to survive. Right, and nobody figured it out. So then, what happened? We moved monies to real estate, and real estate went from the 2001 bubble to 2008.
Yes.
Put things in perspective. So
Yeah.
all we did was just move funding from one side to the other one.
Okay.
Right. So survival was how to adapt. You know, when you come into this financial being, and I say this to young individuals who want to come into finance.
Yeah.
There's a difference. So I'm a commercial financial person. You were commercial and you were an investment banker. We're two different people, right? I work on just general facts today. Investment bankers look at what's going to happen today and
in the future.
tomorrow.
Yes.
Correct. We live in a different world, so that's why I'm very careful about talking about investment bankers. they get paid the big bucks, but they also take the biggest risk.
Yes.
Right? Commercial bankers is a contracted. We're very calculated in what we do.
Yeah. So when we were having a conversation about, what we're going to discuss about this show with a group, Mike said he knows nothing about commercial lending, and I think it represents
banking.
Yeah.
Lending and banking.
He said commercial lending.
Okay.
Yes.
Alright.
Yeah. Because Mwaura is a VP for commercial lending.
Yes.
The Harbour Bank of Maryland.
And,
yeah.
and it's not commercials for marketing.
No, not commercials for marketing.
Okay.
And that's the reason why it's good, because there's a lot of people who hear this term, commercial banking, commercial lending, and they don't know exactly what it is. If I have, like a small aka business, I'm selling a few things off my my pickup truck or off the trunk of my car. Can I come to you, like I have a commercial activity, lend me some money? Or how does it work? What exactly does a commercial lender do?
That's a great question. So I'm going to start from the beginning in terms of what you said.
Yeah.
Yes, I've been 25 years. I'm a beast.
Okay.
In terms, I've been in this industry for so long, which it means I know how things have gone right and how things have gone wrong. So how do you begin? Great question, right? If you're a small business owner at zero, you need 3 years to get financing.
Okay.
Right? So if you're starting off and you're selling curios, things from Kenya, right? You need to be in business for 3 years, because I need 3 years of financial statements.
Okay.
So if you don't have that,
At the bare minimum.
at bare minimum,
Okay.
but if you don't have that, the government has the SBA, Small Business Administration, and then within the Small Business SBA, there's something called the SBDC, Small Business Development Corporation.
Okay.
It's a micro financer. So what they do is that the dollar amounts that they're going to finance you are smaller. So SBA starts at 25,000, if I'm not mistaken, depending. The 7A, and they have minimums, but that's where you start. Somebody who's going to help you.
Okay.
Go into it.
So if the SBAs are starting at 25,000, how much are you starting at? Or that's something.
No.
My friend, it's commercial. It's commercial.
I'll say this. What I was gonna say, because I was told I'm not allowed to curse anymore, and my mom's watching right now.
Hiya.
And she said I can't.
Hi, mommy.
Yeah.
And she
Hi,
told me-
Mom.
So you better behave well.
Yeah, I have to behave well.
Yeah.
So we can start anything at 25,000 and up.
Okay.
Right, and because we have other community lenders, so it's not to say if you need a $5,000 loan or $1,000 loan that we don't have a team that can help you. It's just not going to be me.
Okay. You only help the big boys.
Okay,
Okay.
I'll build big.
Okay, all right. There we go. So very interesting. You're tuned into the OneMic show, and I can see questions already coming in. I can see Esther Mulusa here saying, I'm trying to trick the people from Shimalavandu of my whereabouts. Please just announce that I am in the dirty south for now. Thanks. Okay, all right. So Esther Mulusa is in the dirty south.
She's not in Shimalavandu.
She's not in Shimalavandu.
No, she's in the
She's in the dirty south. Yeah.
Oh, okay.
And then Appa Esther was also saying, please allow call-ins today. I have a layman's 2 cents now. 202-683-4570. Press *5 to speak. We always say, for the people who want to call in, mapema and your best.
Call now before 10:58.
Yeah, before people start
10:30.
calling. Yes, before 10:30 and 15 people on the line waiting to talk when the show is about to be over.
And,
so the
and
number
I was told that we have chicken wings at 11. So
yeah, so there's a chicken wing cut off at 11. Wow. Now this is nyuma ya tent.
Wow.
kind of
Conversation. Mzee
conversation.
anakuja hapa
Sema
ku
kumwaga mtama.
Yes.
Ngoja kwanza, yani mnakulanga chicken wing kama sivyo.
Unasikia sasa? Unasikia huyu?
Sasa Mluya amesikia about chicken wing. Na amekasirika. And this was supposed to be our
Alafu
it was supposed to be our top secret.
alafu unajua Muluya ndio ameorganize.
Yeah.
Inatoka kwa kiti gani kwanza tu investigate?
Hiyo hapo hiyo tufanye kesi baadaye hiyo
Nyuma ya tent.
nyuma ya
Nyuma ya
tent.
tent.
This guy here.
Yeah. So again, the number to call 202-683-4570. Press star 5 to speak.
Yes.
So there's another question that's already coming up here. That's coming up very early before we get onto Trump's economy.
What? Na tuko na call
Steve,
already,
Stephen Bati Sambaza is asking about IULs. So I don't know whether we go to the IULs first, and I don't know whether that's in your lane, because this is another product that has been sold to a lot of Kenyans. A lot of Kenyans don't understand it. They buy it without understanding it. But I think we're going to talk about that maybe later. Maybe let's pick up the call first, because watu wa mapema, we give them priority. Again, the number to call is 202-683-4570. Press star 5 to speak.
2658. Thank you for calling the OneMic show. Name and where you're calling from.
Welcome to the OneMic show.
Hello?
Reduce your volume.
Yes.
Reduce your volume.
Reduce
Yeah, mute something on your
whatever
side.
is on the background, reduce it or nyonga
Alright.
it, please.
Okay, tell us your name and where you're calling from.
Hello.
Hi.
Yes.
Hello. This is Esther Mulusa.
Hi, Esther. Karibu.
Karibu sana. And you
Yes.
said you're calling
I'm
us
calling
from the dirty
South.
south. Okay, all right,
dirty
got
Dirty.
it.
Yes, I'm calling from the dirty South.
Okay,
Yes.
talk to us, Esther.
Now, I'm not an economist.
Mhm.
Yes, I'm not an economist, but I'm just an observant Kenyan. So
Okay.
I just want to talk about how most people all over the world, including the United States, Kenya, people are not really educated as economics, like basic economics, how their countries make wealth, how their countries lose wealth. We really don't know what happens in our countries.
Yes.
The first experience was when I was in Kenya, when I left Kenya for the first time in a major way. Okay, first of all, when I was a university student, I remember we went to Namanga. We went to cross the border at Namanga and we went into Tanzania. That was a while back. And I remember talking to the ordinary Tanzanian on the Tanzanian side. And there was this leftover, from Nyerere times. Nyerere used to put in the curriculum for Tanzanians to learn basic economics at a very elementary level. And I remember hearing that from the citizens. They knew more than Kenya then. They knew about revenue collection. I was very impressed. So that is one. Then the next time I really left the country, I went to South Africa. And I was a young university student. And I remember learning so much as a foreigner about my own country. When I used to take the drive from Nairobi to see my grandma in Vihiga, you see those tea bushes, and I used to feel that this is ours. But I learned in a real way when I went to South Africa that tea does not belong to us. It belongs to a white company, And then I learned in South Africa about foreign, these international treaties that were made a long time ago. Some of them were made during colonial times. I remember I didn't like the tea that I was drinking in South Africa. I didn't like the flavor. And I learned that South Africa had a trade pact with Ceylon, Sri Lanka today, that South Africa got its tea from Sri Lanka. And I wondered why, because Malawi has tea, Kenya has tea, why would South Africa have this colonial pact, colonial trade treaty? They're treaties, right? Isn't that a way of weakening trade within Africa, So I learned some of these things from a personal experience. Why am I drinking this Rubu tea that tastes really funny? Because, Kenyan tea is very high quality.
Yes.
So I learned a whole bunch of things as a foreigner. How that most of what we have in Kenya does not belong to us. They are, foreign companies that really run our country. I learned about the white settlers who have relatives in South Africa actually, and that they own most of the land. So what Trump is doing now, he's kind of opening our eyes into so many things. We are learning so much stuff that Africans, we give away our raw materials, instead of giving it value addition. Why do they take the raw materials and make money out of our wealth, So I just wanted to talk about that and then talk about how even our leaders seem to be illiterate economically. They are not economically empowered because the things that they do. For example, Trump's tariffs, any country who resists, like Madagascar or Burkina Faso, their tariffs are, high, 38%, But Kenya seems to be one of those countries that, has a tail between its legs, and, we've got 10 or 20%. So I think the world is kind of going to shift. People need to push back like Namibia,
Yes.
like Burkina Faso, and we just really need to do it, because from what I know, there was an old trading route that existed before the West. The West was not part of it. They were actually left out of it. But now they've come and taken control of everything.
Absolutely.
And they are bullying everybody. Bullying, what's his name? I hope I'm making some sense.
Yes, absolutely.
Bullying,
Yes.
this guy who was bullied in the White House in front of the whole world, that you must give us your oil or whatever it is, or else
Or
Zelensky.
Zelensky.
You're not going to
Yes.
Yeah, Zelensky, yeah. Or else you're not going to defend you. So I just wanted to put in my 2 cents that we in the diaspora, we learn a whole lot more about our country when you're outside looking in than the people who are at home, It's like we are so brainwashed, and we have these narrow visions, and we think the West is a savior, when they really are not. And we really don't have to kowtow to them. We have to stand up to them like this woman, who is not even being celebrated as a, African woman leader. I heard about her because of her resistance, sending away 500 Americans who had no visas. That's what brought her into the limelight. But I
Yes.
didn't know that we have another, actually elected. Samia took over because of somebody's death. But this is something that the world should, highlight. But in Africa, it's like we are ignored. But let me not go on and on. I'm a great talker, but I just wanted to point those out, that we need to create our own markets. We should not rely on the East. The last thing I'm going to say is that Africa is a huge continent. If we can empower ourselves, we can trade within ourselves. The way, why should South Africa go and buy tea because of a colonial treaty outside Africa? Why not empower the people from Kenya and Malawi who grow tea? Why can't we trade within the continent? We are many. We are more than 1 billion. If we could just empower ourselves, open up our borders, and sell each other these goods, we can do it. We don't have to rely on Western markets that are exploitative. So I'm going to stop there for now, but thank you for listening to me. I know I talk very fast, but I just had to put my 2 cents in. Thank you.
Thank you so much. Thank you so much, Esther. There's one thing that Esther said that that I've always known, but Kenyans sometimes don't like acknowledging this, and that was about Tanzania. Tanzanians are so schooled in so many other things, but I think Kenya, because we've learned English, there's this dangerous assumption that we always have, that we know
We're
more
superior.
than they do, that we are superior.
Yes.
Yeah, it's a very dangerous assumption.
Assumption ni
Yeah.
that if you speak English, you are knowledgeable.
Yeah.
You're well educated.
Yes.
Yeah, and that's very dangerous. There's so many other things that they know. And here, Esther Mulusa was talking about, just some small issues here and there to do with the economy, because economics is one of those sciences that unfortunately a lot of people are unschooled on, not only in Kenya, but across the entire world. And that's the reason why people don't understand, what's happening at a macro level. They hear all these complicated terms, this rate and that rate, monetary policy, fiscal policy.
So
these are things people hear, but they have no basis
Idea.
of how this affects me, at an individual and a personal level.
Yes.
And I know, Micah, there's something that you wanted to say before we go back to Mwaura to get started with this conversation.
No,
Micah.
actually, to get this started, this conversation, I just want to say now, we've spoken a lot now to Mwaura, just to ask Mwaura. So, Mwaura, we're looking at this current situation as it is, and how Esther has explained colonial treaties and whatnot. If we simplify it to what, and she did bring in Trump into this conversation, and now I want to bring us back into the conversation of why we are having the show today. So, Mwaura, what are tariffs? If you can just try to explain to us from a commercial point of view, from a commercial business point of view, businesses are the ones which are being hit with tariffs. Yes, the countries are being hit with the tariffs, but the tariffs are going down up to the businesses. And they're affecting businesses here in America, which are the employers and also the suppliers of consumer goods. And also, they're affecting businesses from the countries that are getting the tariffs, and they're the manufacturers of these products that the businesses here import and come down to us, the consumers, for consumption, and also employ people to sell those goods that are being imported. So, what are tariffs in a layman's term? How can a layman term who doesn't understand tariffs, and how do they work?
So, Micah, thank you for that question. By the way, that was the longest-winded question I've ever heard in my life. That thing, I mean, it started simple, but that when it
is a simple question.
I wasn't ready for it. I was like, I'm ready for it. I went to it, and then you went to other examples. But thank you, Micah, yeah. and also again, thank you. Micah is the one who spearheaded me to be here with you guys. So once again, I give the flowers. Tariffs are taxes. That's what you are. So tariffs are taxes that come in from products that are manufactured outside the United States of America, right? So somebody goes in. So when you buy, then I'll use my example because you guys can see me on video. So Citizen is a watch that's made somewhere else. I'm not bullshitting. I wear a cheap. Yes, I do wear a cheap watch. But somebody is.
So you claim.
Allegedly. But somebody has to pay the tariff, a tax that comes in, the import tax.
Yes.
And that import tax has nothing to do with what you're going to get taxed forward after it gets here. So what we have to do is figure out, when everybody's talking about tariffs, so let's put it together. So the United States is going to, we have tariffs, taxes that come in, product that comes in, which comes, the consumer is the one who has to do it, pay for it. So a product is $10. Now all of a sudden, once it lands in America, it's $12, right? That's zero. And then after that, once you goes into the market, then somebody else is going to tax you, your state, your local, and somebody else. So that $10 product that came in at $12.50 now is $15.99 or $18.99 because of tariffs.
So one of the confusing things that I think, and not to get political, but we're just talking about the economy as it is today.
Yeah.
One of the things that Republican voters were being told, or Republican supporters were being told, is that the tariffs are going to be paid by those countries. China is going to pay the tariff, or Vietnam is going to pay the tariff. But what you're saying is,
or Bangladesh, or China,
is that this tariff comes down to the price that the end consumer
correct,
pays. Because if I'm an importer, I'm importing, like covers for this cell phone, for example, for $10, and I'm selling them for $15. And then now there's a $5 tariff. Correct. So that means now I'm paying an extra $5. So that $5, I'm gonna increase the cost. So the end consumer is gonna pay more money.
Bear the cost.
Yes.
So generally speaking, most goods that are imported are gonna experience some kind of inflation.
Yes, and everything. So let's put things in perspective, right?
Yeah.
So when we said it, when they said electrical and things and car, we're 25, and durable goods are 10%, right? That means your cost of goods goes up by 10%.
Wow.
Your cost of goods goes up by 25%.
Yes.
Right, because it's the end consumer who has to pay for it.
Yes.
Right. That's what you're dealing with, right? And then and I know this is going to be the next question. All right, so we do a reciprocal on the other side. But let's put a spade together. Americans import more than they export.
Correct.
Right. So who's winning right now?
We are consumers.
No.
So reciprocal. When you say reciprocal, you mean matching.
Tit for tat.
Matching. Yeah,
what the other guys
correct,
do.
correct.
Okay.
But he said something that most people miss. Because my question would have been, what exactly do Americans export? Because, am I wrong? Because because you're bringing in stuff, so you're saying whatever is coming in is going to be hit with a certain percent in tariffs, which means that when China is reciprocating, or it decides to retaliate, it's whatever that is being exported to
Yeah.
China
Yeah.
gets hit.
Yeah.
But what is being exported vis-a-vis what is coming into America? Like,
America exports, for example, a lot of agricultural goods.
yes,
Like soybeans.
Yes.
America does export a lot of agricultural goods, and you're seeing now farmers starting to get affected.
but yeah. So then compare
Yeah.
what is being imported. What do Americans consume?
So I think the question here, Mwaura, is that a lot of people now, a lot of the Kenyans who all about Trump, they've kind of gone into the darkness. We'd love them to come back and talk to us
They
and
will-
tell
they'll
us
show up.
what's going on. But part of what they were saying is that it is unfair. Why are they taxing us, or why are they imposing a tariff on us while we cannot impose a tariff on them? Because there's that talk. Because now here I'm representing the regular person who loves Trump, and that's how they were reasoning.
So-
Like these guys they're charging us, so it's okay. So let's also charge them because it's unfair.
So if you put things in a real global, right?
Yeah.
Real global, right? And I think somebody said this the other day. The Chinese didn't become the market that they are until the 1980s. So all of us in this room were born in the 1980s, right?
Not
And-
all of us.
No, not all of us.
Not all.
Actually, maybe you.
It's just me and
No,
you.
we were born before 1984.
Okay.
That's
Okay,
when the,
so-
that's,
yeah, yeah,
that's,
thank you.
that's
Okay,
when
that's
that's
fair.
when the Ronald Reagan and the Republicans made a deal with the Chinese,
Okay.
and that's when we moved manufacturing to China. And then Bush came back and he doubled down and moved all our manufacturing to China. So you can't go and blame China for things that are happening today. We're the ones who created it. Now, Trump wants to bring it back. All right now, but you've built a beast that cannot be broken. Think about this, right? China is the #1 global market. Global, not American. Global. How are we going to bring that thing back? And then when you come to
he's gonna build Guangzhou in Arizona.
Oh well.
I'm just saying, see, because basically, like, where does everybody go to source for goods? You go to that big market. Isn't it in Guangzhou? Or am I?
Do Arizonas have the skills of working in those Guangzhou?
Working in those Guangzou factories.
Okay,
We have the
okay, Micah,
skills.
now you're asking many questions. Me nasema too, he's gonna go look for space. Where there's space, he'll take these things and dump in your plan. Because if there really was a plan, that somebody actually had a plan, it would have been well thought out, well laid out, and we wouldn't be where we are now. And it's gonna get worse.
So even like to add on to what you're saying, DJ, cheese comes out of Wisconsin in America, but right now cheese comes out of everything foreign. Look at your labels, Kruger cheese, whatever it comes in, it does not say Wisconsin.
Where does it come from?
It comes from China, or it comes from a foreign market. Somebody
Wow.
who's getting charged 25% right now.
Wow.
So my cheese products, because I like a sausage, egg, and cheese in my breakfast sandwich. So
The Kenyan sausage or this nasty
City.
American sausage? Okay. Yeah.
More is American.
Amora is American.
Oh,
He's-
so
American.
so
Whoa,
here,
whoa,
Jewish stories are transformer.
I know.
I'm American. What you know? I
Hold on.
was going to say this to you,
That
Ali.
question about transformer, is it a Nyerit question? It's a different question.
Let's not get distracted.
Oh,
here.
sorry,
You guys
how-
are getting distracted.
Like
Yeah.
he says, yes, I'm American, but
Yeah.
I use your line all the time.
Yeah.
I'm Kenyan by birth,
American by design.
Okay.
American by design.
Uh-huh.
Mugikoyo by choice.
Jesus, I wish you would.
Okay, so Apple, we're gonna send you a patent fee. We're gonna send you a patent fee for using that for using that line. Don't worry about it. Invoice coming.
Okay, tell us about-
You're a commercial lender, so this will be nothing
Yeah.
for you.
Well, in the commercial lender, and we said that we're gonna move into that commercial banking
Yes.
area, right? So what does it mean to be a commercial lender?
No, but before we
Okay.
go back there, like just so that we do not lose the train of thought of what's happening here.
Yeah.
Like in as far as the manufacturing is concerned, because you're talking about cheese now that's coming from China, and a lot of products that people are using day to day. These are products that are coming in from China. And the one thing that I had Tim Cook, Apple CEO, say, people are constantly talking about these jobs were being offshored because of labor costs, but it's like there's something beyond that. Right now, even if you were to return those jobs here, even if American labor cost was to go and be at par with the Chinese labor cost, those skills are not there, because these are very precise skills that are required. And it's not only the skill to build the product, to build the iPhones, and to build all the other American products that are being built in China, but it's this other ecosystem that surrounds the factories that are building those products.
Moving those products.
Yes.
You know, the whole, what is it called? The Amazon, what do they call that thing? When the way they're moving
The
things.
supply chain.
yeah.
Supply
Yes,
chain.
that thing is a whole.
So it doesn't happen overnight.
No.
Overnight.
No. it
Those
doesn't.
of us who work in the manufacturing industry, we can tell you, you know, like
moving your products, right?
yes,
Bringing them in.
we can tell you if our product was to be if it was to be manufactured here, first of all, beyond just the cost of building the end user will pay like triple the price. Beyond that, there's also the fact that these very precise skills that are required, and we do have skilled craftsmen within our company, but getting them at scale, if you're going to start building this stuff at scale, getting them at scale is just a problem, because even getting a few of them is one of the most difficult things to do. And I think those are the things that I think people need to live in the reality that this is where we are. And if America wants to build a new manufacturing base, I think there just has to be creativity on how to do it and figure out, you know, like what it is that Americans can manufacture. Because out of those things that are being manufactured in China, it is very difficult to just bring them over and start the manufacturing.
I was gonna ask, you know,
okay.
before,
Which American is going to manufacture? Americans wanataka kwa TikTok wote.
Wanataka kuinfluence.
What are they going to manufacture?
Yeah.
my question, I think this boils down to what would it cost to have local manufacturing equivalent, let's say, of China. So whatever is happening in Guangzhou or whatever is happening in Bangladesh, copy paste.
And bring it to Arizona.
Yes. Or Virginia.
Or India, Hyderabad.
Yes, Hyderabad. Mwaura to you, over to you.
Yeah,
Because
and
that's the
every-
thing.
Yeah.
And what you said, but let's put things together, expenses, right? So as a banker, when I look at a company, I don't look at your top line number, your gross sales. I look at your net income. Can you pay me
profitable?
back?
Yes.
Exactly. Like you could be a $22 million company or $50 million company, but if you're losing it on the back end, doesn't matter to
When
me.
you say losing, what's losing? Like when you say
I mean,
you're
like-
like
making a
you're in
loss.
the red.
Yeah.
Yeah.
so
you're in
if
the red.
if you're a 50 million but you're bringing in what your profit is what?
Zero.
There's a lot
Nega-
of 50 million companies are bringing in zero negative.
Zero.
Yes, zero negative. That's what you
Zero.
mean.
They're
Okay.
equaling
No,
out,
no,
which
no.
means they can't take on anything else.
You cannot take on anything else. So,
Yeah.
and the thing is, like they say, the dog story: don't chase your tail. Right? The dog that's going in a circle.
Yeah, you'll go in
chase.
circles,
All
yeah.
you do is sit in circles. Man, I lost my train of thought because I wanted to say about something that you said, but at the end of the day, right? If you're in this market, and no, if you're in a business owner,
Yeah.
right? Zero is what you have to find. Figure out what your zero is. And zero is not top number, it's bottom number.
So what do you mean by bottom number? What
So
do you
your
mean?
net income.
Your net income.
Your
Okay,
net
so your
in-
bottom line.
your bottom line.
And that profitability is actually what, in the long term, determines the valuation
Correct.
of a company. Now, there's a question here that was coming from Rachel Macharia. Before we go to Rachel, namkaribisha Mimo Koinange, karibu sana, thank you for tuning in. I can see and Mimo Koinange also from Dallas. I can see Atieno Ayegba Okech all the way from Atlanta, Georgia.
What up,
Karibu
Jackie?
sana. Yeah, all right.
Hiya,
And then
Bora Bizzle is here.
then we
There are
have
business here. Cecil.
then we have an educated Stephen Batty saying an educated electorate is dangerous. Is a dangerous one. Esther Mulusa touched here. And then Apa, I can see Edgar Ogechi, karibu sana, and Cecil, karibu sana. And then also We have a number of other people who are tuned in. I think on YouTube. We also have Wairimo karibu sana. Wairimo says, hey friends, warm greetings from California, Costi ya Magharibi. Karibu sana Wairimo. Thank you so much for tuning in. But there's a question here I want to take to Mwaura that's coming from Rachel. And Rachel is asking if you worked at multiple employers. Now this is now coming back to America. If you worked at multiple employer, would you advise to roll over the retirement funds to one account or have them stay? I have my theory on this, but let me hear you first.
This is a very personal question, right? There's no right answer to say yes or no, right? In order to sustain things, I would say put it together, but that does not always mean that it works out in your favor. So I've worked at multiple banks. I have 2 401ks and managed by 2 different companies. They're coming from two different companies, but Fidelity is the overall company that manages it, right?
The fund.
And they fund, and because each 401k is individual. One's very aggressive. My oldest one is extremely aggressive. My other one is just in case, things go bad. Right. So
polite.
Polite. So you have to look at your impact and what's going on in your life, and make a good decision for you, whatever that means. Right. I can't tell you, but I would say this: if you're under 40, go aggressive.
Okay.
And if you have children, manage your risk.
Play safe.
Yeah, play it safe. Right. If you're single and 45, man, let's go shoot.
And if you live in Baltimore, I'm just asking for the guys who
make sure you have a bulletproof vest.
So
good question. Put this: Baltimore has one of the biggest Stifel, STIFEL, one of the biggest management companies in the world.
Okay,
and they're based out of Baltimore.
Okay, good. Now sticking on that 401k question, I have a theory, and this is my specialty within personal finance. I always 100% of the time tell people have control of your 401k. If you're moving companies, you have 60 days to transfer it to an individual retirement account, an IRA. Please do it. I know a lot of times people take it and give it to the other company that they're joining. My advice, and this is based on so many people have advised and so many things that I've seen, when you're moving companies, or whatever brokerage you prefer, whether it's Vanguard or Fidelity or T. Rowe Price, move it into an IRA. Now, with my understanding that in personal finance, because there's the language that you used, aggressive, conservative, moderate. What I've come to learn, like talking to a lot of people, 90% of the people do not know what that means.
So, and so glad that you said that.
Yes.
So IRA, I'll give you, and now 2 bankers are talking to each other.
Yes.
Right. So we have to slow it down.
We have to slow it down and be careful not to get too much.
So when we go into
I'll blink twice when you guys lose me.
Yeah.
You just blink twice.
Oh, sorry.
So retirement accounts have multiple variations.
Correct.
Extremely.
Yes.
Multiple variations, and it's what you think and how you feel where your life is going.
Yeah.
Right? So I'm of a different aspect because IRAs have restrictions. Individual retirement account. IRA means individual retirement account.
Yes.
And the individual retirement account has extreme restrictions in how you can access that money. So if I was told not to curse, if things go bad, you're going to pay a fine to fix yourself with an individual retirement account. However, with a 401 or 403, you can borrow against your own money without penalty. And you can figure out how life is. If you cash out, then you might get hit with some fines, and
Correct. If you cash out before the age.
So I get that point, and maybe we need to have a show, like exclusively on 401k.
Yeah.
And and the clickbait title was
Gotcha.
Is your 401k in trouble? So maybe we are within topic, but the you know like the penalty part. There's a penalty part of whether you have a 401k or whether you have an individual retirement account, an IRA. You know, like if you pull out the money. And then there's also the borrowing part. When you borrow from your own 401k, I think something that a lot of people, even as bankers, that we never used to tell people is that that's a form of penalty that you're paying. When you're borrowing and you're paying an interest, it's a form of penalty. So within it is a form of penalty, because at the end of the day, you know, like, and I know you're still a banker, and I would reason exactly the same way. When I got out of banking is when I was able to see certain things outside that perspective.
Okay, so what are we considering the penalty? I just want to understand what we considering the penalty.
And let me hold you there for let me hold you there for a moment. With a penalty, with whatever rate you're borrowing, whatever amount or whatever rate you're borrowing, because I think the penalty, when you pull it out before you turn 59 and a half, is it, what percentage is it? It's 5%. Yeah. So when you're borrowing, it could be in that 5% is a one-time fee. When you're borrowing, the interest will continue accruing for as long as you've not paid it.
Yep.
So that 5%
it doubles up
that you were trying to avoid, you're getting it when you borrow. Now, there's another strategy, there's another maneuver, and this is very complicated. Yeah, you have to inbox me and you have to give me a kakasha or a kabahasha if you want me to help you do this. Of, you know, like moving your traditional, slowly moving it to a Roth over time. Yeah, you know, because moving from a traditional to a Roth, and again, here we're getting into too much jargon, is what's called a taxable event. Yeah, meaning that you will pay tax, but once it's moved, whatever you get in the Roth, it will forever grow, and you can withdraw it, and you will never be taxed again.
And by the way, that's exactly correct. There's caveats in it, and I think it's very complicated, and it's a different show. Like, you know, like when your kids go to school, you can borrow against your retirement accounts. If you buy a house, you can borrow against your retirement accounts. But that's complicated another day for another.
I was gonna mention that because my experience with 401k was that you could borrow without penalty if you're going to do certain things.
Correct.
Purchasing a home is one of them.
Yep.
Yes.
And basically you pay so you're taking from yourself and you're paying yourself back.
Yeah.
And there's no penalties.
And you know, DJ, Omosh, that's what people don't realize. When you borrow against your 401k, that interest is your money. You're paying yourself.
Yes.
That interest. But we can do this for another day.
Yes, we can
so
do
for the home, that's something that in my experience, I would advise folks to look at whoever your financial
like if you're looking for a down payment for a home.
Correct.
Yes. Okay.
Or even if, let's say, you wanted to purchase furniture or do whatever. So what you're doing is you're robbing Peter and you're paying Paul.
Yeah.
You have $10,000 or $20,000 that you want to use, or you've seen furniture, you want to furnish your house, but you can't take that money and put it direct to the furniture. You would move it to the home and then you take it out of your house.
Yeah.
So there's musical chairs you can play, but you're not going to be penalized on you using it towards the purchase of your home at the point in time when you're purchasing.
Yeah, so depending on what you're borrowing for, if you're borrowing to get money to go to LA7s, now that's a problem.
No, that in fact, that
is a problem.
You might meet Kinajambazi OneMic of
but if it's borrowing that's eventually gonna grow your net worth, like you're putting a down payment on a home, so that might make sense. So I think, you know, like you need to be judicious, because I think one thing that I learned, you know, like now after I got out of banking and I was able to see things clearly. I mean, I think Mwaura Bado has not gotten that clarity because he's still inside. There's certain things that you don't see clearly until when you're outside, is that the reality, the biggest beneficiary of a majority of the borrowing that happens out there is the bank.
No. I agree with you.
Yes.
And before you say, Mose, I agree with you. 10% is the penalty. No, so the thing is, banks are not now for profit. I'm a for-profit business.
Correct.
Right?
Yes.
And whatever my number is, but I'm a for-profit business. I have shareholders.
Yes.
I have people who expect a return, a rate of return. So when I started Harvard Bank of Maryland, the reason why Harvard Bank of Maryland started is because they were redlining in Baltimore. And they weren't
Redlining, for those who don't understand, explain that.
Explain.
So redlining, they were picking and choosing where they lend, and they weren't lending to black and brown people. So they used to write a map. They say, don't put things in West Baltimore, East Baltimore, Cherry Hill, somewhere. Redlining, they tell you, all right, all thing we're going to do is Federal Hill, because that's where the rich white people live. Redlining. So you're discriminating to everybody around the place. So that's how Harvard Bank began.
Okay.
Right? And so we came in and was like, hey, how can we put capital to black and brown people? And that's what sometimes I come in, I'm like, hey, we have to put that money back in. Sorry.
Yes. Yeah, so I get it, but I talk about consumer debt. Consumer debt, credit cards, that is the worst kind of debt. Amen. You know, like, because the credit cards, they have very high interest rates, and I think right now Americans, they owe more than $1 trillion in credit card debt. It has hit $1 trillion. So that says something. Number of comments here coming in. So this was a topic that a lot of people were interested in. I can see Patrick says roll over to Fidelity. It's the best. I'm a Vanguard type of person, but Fidelity, Vanguard, potato.
What is the difference? Because
where they're located.
Yeah.
Oh, okay.
Vanguard is in Philadelphia.
So for the most part,
they do the same thing.
Yeah. So for the most, they do the same thing.
They do the same
T. Rowe Price, there is some subtle differences here and there, but for most people, they're not going to see any of those differences. And then hapa Linda Stewart anamwambia Jimmy Onkangi sasa ile XAXA. Karibu sana. And then
XA, that's what.
And then
no, those are Samos.
Samos.
Cecil anasema, but the interest goes back to your 401k. I think this is what you were talking about before.
Correct. Yes. You're paying yourself back.
And then actually, Mosekemunto is correct that in saying the penalty is 10%, and I think Mosekemunto is correct. Gladys,
Yes,
it's 10%.
Mosekemunto Gladys.
Yes, she's saying it's 10%. And then Rachel Machare anasema, look at us getting financially smart. And then I think hapa there were a few comments here coming in on YouTube. Warimo says, if you borrow from your 401k, 401 or 43, I think she meant 43B, and then leave that employer before you've repaid the full amount, that balance is subjected to a 10% EWP, and also the tax rate for that year. This is something.
And that's actually, she makes a good point. If I may just
early withdrawal penalty.
Yeah. So what happens, and that's a good one that she brought up, right? So you borrow against remember your retirement money is not taxed.
Correct.
Right? It's not taxed money.
It's tax deferred.
Okay, tax deferred. Look at bougie ass. It's not a curse. But it's tax deferred, right? And what happens is that once you break that contract, you hit the entire taxation.
Yes.
And the maximum, because it looks like an early withdrawal, which is what, 25%. Think about if you break your retirement contract, they hit you at the maximum.
Yeah. So when you file your taxes, you're gonna see a very shocking number.
So it's like the regular 10% plus whatever your tax
plus whatever you owe in taxes.
Yes.
And so it could go close. It could go even up to 30%.
It could go
depending on what bracket you.
And not even that. If you get laid off and you have a 401k loan.
Yeah. Yeah, so that's
you get
something,
hit the same penalty.
Yeah, that's
so
something.
So whether you leave, you get laid off or something. That was a good one.
Yeah, good one. That's why I told you
because you've broken.
Yeah,
basically you've
broken the contract.
Yeah,
right, and they smack you.
Yes. I want to remind the listeners that you are tuned in to the OneMic show, and I'm your host and producer, Ali Badawy. We are talking to the VP of Commercial Lending at the Harborside Bank of Maryland, Mwaura Muroki. We've just unpacked quite a number of things. Trump's new economy. We're talking about 401k here. And coming up shortly is a discussion on is a discussion, or we're going to talk further about the 401k accounts melting away and what you must not do. Already, like people have already been reading ahead of the teacher and answering some of those questions. But what is a conversation on finances for Kenyans without talking about real estate, aka Boroti, Maguta. We'll soon be diving onto the topic of whether to buy or not to buy a home in these turbulent times. And should we even consider selling our idle Borotis back home to increase our cash flow for our families here in the diaspora? I want you to keep it locked for that and more. And our lines are open. The number to call is 202-683-4570. Press *5 to speak. Number again, 202-683-4570. Press *5 to speak. So just continuing on that conversation about 401ks. In these turbulent times where, ulikuwa umeingia 401k, for those who have big 401ks, maybe your 401k is at $1 million. And then you go back 2-3 weeks later, it's down to 800,000. Now, when you see such things, what is it that you should do and what is it that you should avoid doing?
Stay.
What do you mean by stay?
Stay where you're at. So
do nothing.
Do not move things around.
Do nothing.
Do nothing. And it's very difficult for us as individual investors not to stay, because let's put things together. The market dropped 2 weeks ago, 1,600 or 2,600 points.
Yes.
If you looked at
a lot of people don't understand what 2,600 points is.
So the stock market, the Dow Jones, which is the top 500 companies in America.
The S&P 500.
Yeah. They're the ones, so their valuations, how people feel comfortable about them, they dropped by 2.6%.
Yes.
2.6%.
Yeah, and that's a big number.
That's a huge number if you look at the entire global. And then the next day they came back up by 1.6%.
Yes.
So there are people who made money and there are people who lost a lot of money.
Yeah.
What does that mean to you as a regular person? What does it mean to you? So when you work for a company, especially like these big companies and your 401ks, they invest into those. So your investment, you have somebody who's an investment manager. Your company has something that they have that they invest for you. And when you take that loss, don't look at it.
Yeah. Just take it. Just take it like a man.
It's gonna come in.
Or take it like a woman.
I didn't say that.
Thank you
did.
for clarifying.
Yeah. Take it like a man or a woman.
I didn't say you
That's
did.
what I meant.
Because women nowadays can tell.
And then, but also, let's put this, and because you guys have a broad audience, right?
Yes.
If you're 22, leave it alone. If you're 66, oh my God, it means something different to you.
But I'm assuming even if you're 66, because there's that part of the reason why.
And what if you're like 72, like Omosh?
Part of the problem.
I didn't want to say it, but that's what I was
part
thinking.
of the problem is the people who sell these exotic products. I'll call them like IULs.
So IULs are exotic.
Yeah, those like okay.
Just
By
doesn't wanna
exotic,
give it a bad name.
by exotic, I mean that 90%, let me say 95% of the people have no need for that.
No.
So
I think what happens is that when the market goes down, like for example in 2025, the people who sell those products, they come out. You see, we told you. You see, we told you. So, and here's the thing: even if you're close to retirement, let's say you're 57 years old and you're approaching retirement, and you're seeing this money melt away, like at 10%. My thinking is, if you're gonna be retiring at 60, for example, it doesn't mean you will be pulling the full amount of your retirement, and you shouldn't even do that. Because when you get to that age, it doesn't mean that you won't be taxed when you pull out the money. All that it means is that you will not get the penalty, because there's a penalty, the early withdrawal penalty. You will avoid that once you turn 59, but then when you pull it out, you'll still be taxed. So the people who make a mistake of, I have $1 million in my retirement account, I'm taking it all, So you're like, okay, so your brokerage, and by the way, most brokerages nowadays are very good. Fidelity, Vanguard, they will have a very big pop-up there, and they will tell you this is a taxable event. What they won't tell you is how much you're paying in taxes, because in all fairness, they don't know your tax situation. So you'll get to know your answer the day when you go file your taxes. So when you go filing your taxes, you're happy, you took $1 million, sherehe hapa na pale, Vegas, LA, nini nini. Then when you go file your taxes, they tell you you owe 300 and something thousand dollars. Yeah, on $1 million, you'll owe 300 and something $1,000. They will take it away
That's
very
your
easily.
30%. That's
Yeah.
for
Before
sure.
Mwaura answers, what is IUL? Because some of us don't even know what IUL is and what does.
Exotic.
So
What would you say exotic? What are you?
So IULs are these products that, first of all, they're very difficult. They're called indexed universal life insurance. Yeah. So they try to mix up elements of life insurance where you have some investments, you're getting some returns out of it. Because typically life insurance, you're paying a premium and you're waiting for an event to happen. If the event doesn't happen, then all those premiums that you paid, it's just like car insurance. If you pay insurance and you never get an accident, you get nothing out of it. So with this indexed universal life insurance, they try to mix both, where they're telling you that you will get a certain percentage, like every year. But then on the back end, there's very high fees. So whatever they're telling you, you will get, they index it to something. And then when the market goes up to like 25, which has happened in recent years, 25, 30%, your growth is capped. So you cannot, once you get to a certain percentage, there's a certain max. It could be 8%. It could be 9%. So if the market is giving back 30%, you're capped there. And then now the argument that they bring in is that, when the market is negative, we are still giving you something. What they don't tell you is that if you look at, for example, the past 25 years, or maybe the past 20 years, maybe there's been one or two, or maybe let me say 3 or 4 years when we've had, like a major market crash. So most likely, your money is gonna be growing, and I know people who sell these products, they kind of don't like me. And this is what I tell people. Notice one thing.
I'm not going to say anything.
Notice one thing. There are no financial experts who sell that product. And I'm saying this in a very kind way because I know there are people who sell it who might be listening to me. They target especially people in the healthcare industry. So imagine if I'm in the finance industry and then I'm here selling you a cure for cancer. Would you come and buy it from me? And I'm not a medical expert. I'm selling you. So what's happening is essentially what was happening with this drug. What was it called? Oxycoron. The people who are selling it were people who are not in the medical industry. The oxycoron sales people, the people that were hiring to sell it, were not in the medical industry. So IULs, this is the oxycoron of the financial world, but that's not the topic of today.
Got it. I just wanted.
But I would like to opine. Just
Sure.
I'll be very fast.
Yes.
In what you're saying. You hear that opine?
Yeah, I know. Yeah.
Jeez.
Yeah.
Don't play it.
Omosh will use it next week and pretend he knew it.
Next week in the next
That's what
hour.
it does, yeah.
In the next
No,
hour.
and you hit a lot of points. So,
Yeah.
but the thing when you have that, so life insurance. Why do you need life insurance? So we don't changa, right? You need life insurance so we don't changa. That's your zero, right? Everything starts at zero. Where do we start? Is a zero, so we don't changa, right? And everybody needs to have a life insurance. So you can have a term life insurance, which means like for 25, I'll use myself as an example. When I was 12 years old, my dad got me a term life insurance, and it was a 30-year type, 30-year term life. So I was like, man, I was so not a curse. Negro, you think I'm not going to be here in the next 25 years? Term life.
Yeah.
And it expires.
So it expires, yeah.
Right?
So if nothing happens,
Nothing happens.
Yeah.
Whatever he's been paying for those months,
Yeah, that's gone.
is gone.
Yeah.
But if things go sideways,
Yeah.
there's going to be something that's
Yeah.
going to happen. And then we go to like universal life insurance, right?
Yeah.
So universal life insurance has two impacts into it. You have a term, but also the biggest one that makes it sexy is because
there's
you
that
have
return.
investment products that come in behind it, right? So like if you like, I have one of those universal. So you come in, I put in my stock portfolio. Like I've been aggressive on mine, extremely aggressive, right? Because I'm like, listen, man, I need to hit 100. My grandfather made 100. My grandmother made 100. So why am I going to be conservative?
Yeah.
Right? But you put in, it gives you the investment aspect into it. So it's not to say that you didn't say, I agree with you, but I feel that everybody has to understand the entire story, because there's some people who are risk averse or risk heavy on it,
Yeah.
you know?
But here's what I'll tell you, Mwaura.
Yeah.
90%, and when I say 90%, I'm being very conservative. 90% of the people, they don't know what we're talking about.
Oh, agreed.
So a lot of people who who are buying this product, they actually have no idea what they're getting into. So when they come back and say, "Oh, I want my money," they're
Right.
told, "No, you can't access your money.
Right.
You can't
And-
access your money." So
Yeah.
so a lot of people who are being pushed into these products, they're pushed into these products. They sometimes don't even have an emergency fund.
Correct.
Yeah,
not true.
they don't have certain basics that you need to have before you get into playing around with these exotic products. They don't have a grounding in those, and that's what I've learned works for most people. Is get them something very basic. Like for example, if you don't understand investments, get the S&P 500, go and sleep. Like it is not, like you're gonna be better off, because the moment you start, like teaching people, for example, to trade stocks and they don't quite understand them, guess what's happening to them in 2025?
Losing.
Guess what's happening to them in
And
2025?
do you know you just pulled a double negative?
Hmm?
You pulled a double negative.
Well,
You said
yeah.
people don't understand stocks, and then you said S&P 500. Most people don't understand what S&P 500 means.
But the S&P 500
no, what standard?
is
you have
easier-
to tell them
is
standard.
easier to explain.
What I'm saying, Standard and Poor's.
Yes.
A lot of people don't understand what S&P means.
I agree with you.
Right, sorry, so I didn't mean- I was
no,
just
I agree
saying.
with you. I agree with you, and thank you for correcting me.
Yeah.
But that's something easier to teach,
Correct.
and it's
Yeah.
one thing.
Agreed.
This is the only one thing that you need to know, because most people are not gonna spend hours and hours, like learning about these products. So that's why, like it's very careful. And then another interesting thing about insurance that I think also people need to understand, and even life insurance, especially the term insurance. Do you know how many people, an estimate of the percentage of people who get an event and benefit out of it? Anyone who can make
I'll
a
go
guess?
with 5%.
5%. Mike, make a guess. A wild guess.
22%.
22%. Omosh, wild guess.
18.
I don't know whether Micah is still there. Ama alipata shughuli. And
Why did you
anyone.
look at me?
he's
Why did you
there.
look at me?
Yeah,
No,
and
he's
yeah,
there, but
yeah,
You
and
looked at
anyone,
me like we were on the phone.
and anyone on the comments, if you wanna make a guess, because the number I will give you will shock you, and it will shock most people. The people who benefit, especially those ones that expire, because they're those ones that are whole, which means that you will most likely benefit. The number of people that benefit are, believe it or not, 1%.
Really?
Yes. And if you think I'm not telling the truth,
No, I believe you.
go to ChatGPT, go to Google. It's only 1 out of 100 people. So I think when you're getting into a life insurance product, also have a full understanding that you're getting into it with a 1 in 100 chance that that these premiums are gonna benefit someone. I personally I cannot advise someone whether to get or not to get life insurance, but I will tell you, one of the best insurances you can have is your family, the people you have around you, and your community.
Yeah.
One important thing that you need to figure out outside the money is who's gonna take care of my kids if something happens to me, like, and my wife, or if you're a single parent. That's the most important thing. It's one thing, if you have $1 million there for them, what's a 5-year-old going to do with $1 million? Nothing. So I think it's very important to know, and even talk to people, have these conversations, and even have written agreements. If something, especially for single parents, because single parents are at a higher risk, because you're a single point of failure. In case you die, then your kids have no one to take care of them.
Right.
So have these conversations of, if something were to happen to me, and even death is going a bit far with all these shenanigans happening, people with green cards are getting pulled and they're getting deported. Yeah. So if something were to happen to you, what's happening to your minor child? So those are the most important things that people actually need to think about. Will my child have a nice, warm place to stay with a good family? And these are things that people don't think about, because I think we're so tuned to think of the money aspect.
So
money
in other words,
aspect.
unasema kuna
So,
opportunity ya godparents kucharge wale watu wengine kitu kidogo prior to them taking on parental duties. Nauliza tu.
But I'm not understanding your question, because
So godparents are supposed to step in, basically. If something
is
were
that
to
what
happen to-
godparents are supposed to
That's
do?
what they're supposed to do. They're supposed to step in case
Yeah.
something were to happen to the parents,
Yeah.
as well as to be there for huyu mtoto, almost kind of like a shadow parent, for
Yeah.
lack of a better word. Some even take it to the religious level where
Yeah.
wewe ndio unaenda kwa baptism, now,
Yeah.
those sorts of things. But the godparents basically are the ones who, in case of
Yeah.
I'm saying that huyu ndio
the way it
mtu
was.
Yeah.
is going to look out.
Okay.
Yeah,
All right.
and just adding on to it, and I don't like to pump things up, but our friend Cliff Koth is great
in personal finance.
in that personal finance,
Yeah.
and making sure, and it's I always say this, right, especially with personal finance, right, find somebody, a trusted advisor that you can believe that is going to take care of your family if you're not there, right? If you can't be there to make the decision, right, you need a trusted advisor that's going to be there to take care of whatever
Absolutely.
life
Yeah.
has to go,
Because everyone has having a trusted financial advisor is like having like a personal doctor.
Correct.
Yeah, it's like having a personal doctor. They're advising you on your health, because finances is one of those things that can have very serious ramifications
Yeah.
if you don't do it the right way. If you have no will, if you have no it can have very serious ramifications. And I see quite a number another very interesting topic, because I see so many comments were coming in here as we were as we were talking. Thiambo Duck says she's always a Vanguard girl. And then Eunice Smith says, first time listening and I'm learning a lot. Eunice, thank you so much for tuning in. Please tell us where you're tuned in from, what city, what state, what country. And then here Stephen Battis is saying, if your stock portfolio goes down and they're still investing, will it mean that you will get more shares quantity wise of the stocks that you have invested? No, like when your portfolio goes down, it's still the same number of shares. It means the value of each share is going down, basically. And then Gerald Oliechapa is saying lifetime based on the made market, lifetime based on lifetime based on the index market. To cancel the fees, you take the cash value of the term. And then Apa Estamulusa says Obama promised the same reward for accident-free driving, but it never happened. And then Apa Gladys says, I didn't know that's how you look at agents who sell insurance early. Not insurance. No, I'm not talking about insurance. I am specifically talking about one particular product. And you see, let me be clear on this IUL thing. Is there a segment of the market that can benefit from it? Of course there is. Of course there is a segment of the market. But then the way IULs are being sold, people are being told to stop contributing to their 401ks. That's part of because I've been in some of these, because I sometimes go inside of them to hear what people are being told. They're being told stop investing in your 401k and put your money here, which I think is a very fatal mistake that I think a lot of people have made, which is why it's that one particular product that's being sold to people who don't understand it. And the people who are selling it, most of them are nice people. They're nice people, but then they're not financial experts. Ask yourself, anyone who's selling this product, ask yourself this question. Why is it that they are specifically targeting people who are not in finance to sell, this product? It's because there's certain things that you're not going to question if you're not in finance. So I think the people who are selling, they've also been sold to the product, and it's very difficult to tell people who are already inside of it. So I'm not talking against insurance. I'm talking particularly against this IUL, which is being sold to people. It's being sold by people who are not in the finance world. Not saying they're not smart people, but remember, being in the finance world, it means you have so many years of experience of so many different things. You know, like your 25 years of experience, like you can't get that in a 90-minute or in a 1 week training. You cannot get that. It's the same way if you're in the medical field. If you have 10, 15 years of experience in the medical field, I can't go and take a 1 week training and say now I'm qualified to recommend, you know, like certain drugs, or look at someone and say that this is the surgery they need, or that's the surgery they need. So I think, you know, like I'm trying, and I'm being very careful, because I know there's so many people in the community who are selling this particular, and I'm not talking of life insurance. I think people need to separate the two. Unless you know exactly what you're doing, like Mwaura, for example, he knows what he's maneuvering around. 90% of the people do not know what they're doing. When you stop contributing to your 401k to get into this product, which is what people are actually being told to do, I think that
becomes a problem.
That is very, very problematic. So I'm not saying, I'm talking about IULs, not life insurance. Life insurance is something entirely separate.
With the IUL, you've hit the point. So there's nothing. You've hit the point, and also the thing I think that you hit. Know and manage your level. Where are you? Right, in these IULs, everybody has levels. Don't lie to yourself. Everybody has levels, right? Yeah. If I got $1 million policy or got $100,000 policy, we live in different levels, right? And the IULs, and something that you triggered in me, I say this only as just a bad bypass. We used to do whole life insurance financing. You need to be loaded to get whole life insurance financing.
Yes. That's for very rich people.
Exactly.
Yeah, it's for very rich people.
And it's one of those things, but it's the same product. But
it's very expensive.
It's front loaded expensive, back end cheap.
That's right, but you have to be able to afford those monthly, those very high
in
monthly
the beginning,
premiums.
The first 10 years. And why I brought it up is so like what you're saying. It's everybody has to understand where your levels are, right? Don't come over there and tell me with a Chevy Corolla, a Toyota Corolla, and then you want to be in a Cadillac CTV. We live in different worlds.
And you see, unfortunately, the reality, there's a lot of preying on people. On most people, and I would call it a conservative 90%. Most people don't have this knowledge, they don't have this information, and that's why I think it would be important for whatever community organizations you have, invest in getting people to teach you about finances, because it becomes very, very difficult in convincing people, especially when there's a lot of groupthink, where everybody in a certain group, they're being told, buy this product. It goes back to the time in Kenya where everyone was being told to buy quails. They're very profitable. They're gonna and people going en masse. So yeah. So and then up I can see Eunice is asking, what do you suggest? Like I always say, I would never because I don't know your individual needs. I can never advise on what kind of life insurance you need to get. That's something that you need to do an analysis with an expert in that field. Not only an expert in that field, someone who understands life insurance and someone who also cares about you. So you have to balance the two. Because also, life insurance is also a business. They're also in the business of getting people to pay premiums.
And by the way,
you also have to balance the two.
And Bandi over here says, you know what, aliye nasema watu wanaacha for 1K for IULs ni kama watu walivyoacha cancer treatment kwenda Loliondo kupata kikombe cha babu.
There you go. That great analogy from Bandia.
I think someone has to translate that for
Yeah,
Mwaura Muroki.
How do you say that in Oswahili and in English?
Yeah, but anyway, so not to lose Eunice's point, because she was asking what I suggest is I can't advise you on the life insurance part, but I think the basics, make sure you have an emergency fund. Before you start getting all these extra products, make sure, especially if you have a family, make sure you have an emergency fund. And an emergency fund is, at least, if you have a family, at least at the bare minimum, 6 months of your living expenses.
So Ali, just agreed with you.
Yes.
that part, but 6 months is not realistic to most people. Right?
Yes.
Right? Like, it's not realistic. That's I say the same. I have the same pitch. Make sure you have 6 months, right? But it's not realistic to everybody.
Yes.
Right?
Actually, to most people, you're right.
Correct.
Yeah.
Right? So the bigger question, so this is a question from me to you.
Yeah.
What would you recommend? So you have a guy, somebody who's, so minimum wage is what, $19 an hour,
Yeah.
right? So you're making $25 an hour, $40,000 a year.
Yeah.
Right? And they have to save, and they've got 3 kids, and they have an apartment.
So, now here's the interesting part. First of all, if you've not met, it doesn't have to be the full 6 months,
Right.
but you should be working towards getting there. Maybe you have only 1 month. So slowly, and this is not something that you can do overnight, have a plan of getting it to get to 2 months, to get to 3 months, until you get to 6 months.
Right.
Now, if you still don't have 6 months, you have no business buying an IUL.
Gotcha.
I'm sorry.
No, that's right.
I'm sorry if you cannot if you do not have.
But you're insuring your life.
If you do not, first of all,
you're insuring your life for your loved ones.
You're insuring your life
For your loved ones.
You're insuring your life in case of death. But now here, during the living, you can't feed them while they're living. You can't feed them while they're living, because if you lose a job, and you have a family, guess what? Your IUL is not going to help you.
Exactly, and I'm so glad you said what you said.
You mean you can't go there and you remove and then you say?
So what I'm saying, once you've met,
I have an event of a.
So Mosh, once you've met all these minimum buckets, there's certain minimum buckets. The match that your company gives you on your 401k, that's very important for you to take, because if you leave it, you're leaving free money. Because, for example, if your company is matching 6%, you earn 100k a year. So that means if you contribute 6,000, the company is giving you another 6,000. That's 100% return. That's on top of the return that you're gonna get. There is no investment. Someone show me an investment that will give you a guaranteed 100% return every year.
And you're vested on whatever you give.
Yes. So you see, so at the bare minimum, that should be the bare minimum. Now, after you've taken care of that bare minimum, then you should focus on building an emergency fund. And the emergency fund, it could either be in a savings account, or it's also okay to have an emergency fund in a brokerage, because brokerages nowadays, there's ways of quickly pulling out the money if you need it. And to me, I always recommend that direction, because at least the money is not just sitting there. Because if your monthly expenses are $5,000, 6 months is $30,000. That's a high amount of money to just have sitting in a checking account. So that $30,000 over 5 years, if you are vested in the S&P 500, it doubled within 5 years. And so you have 60,000 now.
Correct.
So if you cannot make that minimum, a cue for you to know that people who are selling you life insurance IULs, a cue that you don't qualify for it, is if you do not have enough money to cater for 6 months worth of expenses. If something were to happen to you, then those products are not for you.
And and just to add on to what you're saying, because I agree with you, the only thing I would say, how you put your money away, think of it as a bill.
Yes.
Right? The way we pay our credit cards, our car notes, our mortgages, and rent, just put it away as a bill.
Yeah.
So my recommendation to all my clients is like, listen, man, if you're trying to save something, and he's going to make fun of me because I'm trying it, make sure you put it as a bill, because if you look at it as a savings, because you look at it, I can get it back.
Yeah.
Got it.
Right? I can always I can get it back. But if you look at it as a bill, nobody's going to pay you back.
Yeah, you're paying out.
You're just paying out.
Yeah.
And then you
You're
put
paying
it.
out
it's a
what you
discipline.
owe. You're paying out
Correct.
what you owe.
And then
Yeah.
you put it, and then you forget your password. Right? Don't make it like when things
are
go
thick, you
south-
can just go and pull it out.
You leave that and you forget that password, and you put it somewhere you just know you have
Let
an
it go.
account and let
Yeah.
it go.
Let it
Because as humans, let's think about this. When things go sideways, what do? We look for stuff, right?
We go in the sock drawer.
We
Yeah.
go in the
Yeah.
sock drawer and
Sock drawer,
we
like-
change.
like-
LA7s
you
is
look-
coming up.
LA7,
Everyone is
and
going.
I don't have the money, and I know.
Yeah.
I need.
You're like,
wait,
hey, what
oh,
an
I have to
Ipuli
go. I have to go to Vegas. I need 3K.
Yeah, and then people are staying in 4-star hotels, 5-star hotels, and you're like, hey, let me pull this money. Kidogo, you're $2,000 down. Let me read a couple of comments here that were coming.
Those comments are coming in
Yes.
fast and
Skylar Roberts says term life is sunk cost and it's cheaper if you get it at an early age.
Very true.
And then Eunice is telling us she's from NYC. Asante sana Eunice for tuning in. Skylar says a life insurance will help with not being a burden to those relatives who also have other responsibilities. But people still create WhatsApp groups, people with life insurance. But that's a topic for another day.
another day.
Yeah. But
it's the
yeah.
Harambee
Go ahead,
spirit.
go ahead. Let's
But
do
it's
it.
the Harambee
No. I mean, that's something that
another
also
story
needs
for
to.
another
That's
day.
another
It's
story.
the Harambee
It's a
spirit.
story for another day because this was supposed to prevent WhatsApp groups, but people still want that money, even on top of the insurance money. Anyway, let's hear what Patrick here has to say. Patrick says, a friend whose rent told me she doesn't involve with community michangos because she has IUL, but I said IUL is not guaranteed if things go bad because these insurance companies can file bankruptcies. She replied with anger that I'm a very negative person. Now this is, I think, and you know, like I've been in the, because I've physically gone
Let's
in
go.
those
Let's
trainings.
do it. Let's do it.
I feel like I've physically gone in those trainings. This is how
You have been
people
a
who sell them
recipient of those
are
hours.
trained. They are told, like you tell someone that they're being negative because they're taught how to overcome a barrier. So that's one very common thing. You'll be told that you're being negative. The one thing they'll tell you, typically, they will not tell you exactly what they're selling. They'll tell you they're giving you financial education.
Right.
And that's how it's sometimes it's sold as financial education.
Yeah.
But basically, it's kind of like me telling you that come to my class, I'm teaching health education while all I'm selling is Panadol. And whatever disease you have, Panadol. Whether ni kichwa inakuuma, whether ni mkono, whether umekatwa mkono, Panadol ndo dawa yako, which is essentially what's happening here. And then Upper Steven says, the moment a guy came in an IUL conference call and said, I love traveling and good life, I checked out. And then Atieno says quails were just chilling. Amina Holmes, karibu sana, all the way from Ohio.
Wow. Happy New Year, Amina Holmes. Happy New Year.
Wait, happy birthday, Jackie Cecil.
Yeah, and then
And happy birthday, Naomi.
yeah, and then Uni says I did Holland Universal. Gerald says glad I tuned in, though IUL was I thought IUL was a secure investment. This is profound. And there's so many, if you don't believe me, just go, there's so many people who talk about this issue, like on YouTube, and I can share some of the videos, like people who are very respected in the finance industry who talk about this. And then Apa Adhiambo Dak says, Mr. Muroki, what big words can a Luopian use to decline an IUL without letting Luos down?
No.
Okay, no. So
Wow.
and then
I thought you were going to say opine.
and then Patrick
I am
says
opining no.
best option is to take 30 years term life. If you have a 1-year-old child and it expires after paying premium for 30 years, your child will be 31 years. The goal is to protect your children. If you die when your children are young, not to leave money when you die. But here's a challenge that I sometimes have for people. By the time let's say like a child is maybe 30 years old, I'm assuming by that time they've started working. By the time someone is 30 years old, they are no longer
They're no longer underneath you.
yeah, they're no longer underneath the parents. So and I understand, you know, like especially if you die and your child is still a minor, you know, like I can understand the concern
And
that people have.
actually, I can agree with what Patrick did, because my dad did the same thing.
Yes.
Right? When we were born, when we came to America. So
Yeah.
I was born in Kenya. Doesn't matter how much my
After
twin
you were
is.
born where?
Did that too? Say something. No, I mean, so
I'm
we
quiet for a
had a he got term life for
Okay,
us,
uh-huh.
right?
Yeah.
20 years. There were 20 years, because I was 10 years old when
Okay.
right?
Okay.
So until
and,
30.
and till 30, but he knew he protected his kids
For that.
for that
that
period.
period of time.
And at that point in time, he was like, and after that period ended,
Would you
we
sort?
got all kicked out of his insurances, and he left it us.
And yeah, would you sort? Basically,
Right,
you're
yeah,
on your
go
own.
figure
I've
yourself.
done everything I can do
I've
for
done
you.
everything correct.
So, have you ever had a conversation with him asking him if he thought that 20 years the 20 years he invested of premiums was a no? Well, I'm assuming that he didn't pay the full 20 years. I think you pay like
it's like $60 a month or something, like $30 a month. Something
Okay.
it was minimal, and in between that, so it's my brother and I
Yeah.
who were here. We had a middle brother who got called up, but not that he cashed in, but there was something he saw a risk, and my middle
Yeah.
brother got called up when we were in Kenya.
Okay.
So when we came here, he was like, I gotta figure this.
Gotta protect, yeah.
Protect my boys,
Yeah,
right? And
I understand.
And everybody who knows us is like, you know, Duke and I are rock stars, and we break every rule that was ever created. But he tried to protect us. And everybody should just look at that, right? Don't look at $60 a month for 30 years. Here we are. The good thing
Yeah.
is he never had to cash out.
Yeah, because he was yes, understood.
Right?
Understood.
The good thing is that he never had to cash out, because if he had to cash out, it means that
Yeah, things are thick. Yeah.
things are thick. Right?
Yeah.
Correct.
Now another thing that another piece of advice that I can tell people: if you have a child, you can start putting money automatically into a brokerage. You can open a brokerage account into your child's name, which they'll be eligible to pull out, I think, at age 18 or 21. And if you do as little as that, $60 or $100 a month, it will be quite a chunk of change
Yeah,
by the time, you know, like they're turning 21. So like Jake or Heather, they will have a down payment for a home. You know, unlike most people who are that age, where there will be a chunk. And to me, that's a direction I would encourage people to take. Of course, everybody has a different situation. There are people with situations where maybe the child has a condition, or maybe there's this or that. But that's one area that I would encourage people to take that direction. Do a very small amount. It doesn't have to be $1,000 a month. You can start, you know, like at $50 a month and slowly graduate it to $100 a month. By the time that child is turning 21, they have a net worth of maybe $200,000. Yeah.
Let me
So-
ask, in all that we're discussing with Trump and his shenanigans that are going on, how is that affecting whatever we're discussing, or is it affecting?
No, I'm not quite understanding. Affecting what?
So the tariffs, the layoffs, insecurity with jobs, asking Jerome Powell to lower the, what do you call it, the interest rate.
Yeah.
There's so much going on that people are not aware. You know, like even the few shenanigans that this guy handled the last maybe 3 weeks with the tariffs and wars and people's portfolios sinking, going out. I mean, like you could sometimes find out like on Facebook or whatever, you know, that's, you guys are talking about IULs coming in. People are like, oh, this is a time to buy, but guys have lost enough. And again, this is a conversation that probably some of us really need to delve into, for some of us who do not really completely understand how IULs
No,
work.
I think I'm gonna
But-
let Mwaura answer that. But before that, I think, you know, like at a very basic level, people need to understand that the American economy is what you call a consumer economy.
Yes.
there's something called GDP, the gross domestic product. Gross domestic product essentially is all the economic activity that's happening. You know, like there's a formula that's used in economics that's called CIG: consumption, investment, and government expenditure. That's what makes up the American economy. And the C part, the consumption, is the biggest part, which is close to 70%. So, and that's the reason why sometimes in America, when something happens, they quickly give a stimulus, because when Americans stop spending, it means the economy starts contracting, and so many other things start falling apart. So the less amount of money you spend. Let's say, for example, like you decide to cut on groceries. So now instead of spending $800 a month for your family, you're now spending $500. That means there are less groceries that are making it to the shelves. So that means they have to cut someone who's working in bringing those groceries out. When you're cutting someone there, it means there's a farmer who can't supply all the food that they were supplying. So there's kind of a domino effect that happens across the economy, which is kind of what's happening now. And then that R word comes up, which people hear a lot, which is recession, which means the economy is shrinking. It's contracting. So when it's contracting, it means people are losing jobs.
It's receding.
Yes, people are losing jobs, and the paychecks are smaller. So essentially, people are suffering. Mwaura, I'll let you talk a bit more about that.
And by the way, I have nothing else to add, because you just hit on every topic, as my paper has over here. But you hit everything. So let's look at things, right? When the economy is contracting, as you said, we reduce interest rates, so we need people to spend more money, right? So I will reduce your mortgage rates.
How does reducing interest rates make people spend more money?
The biggest one that actually, and that's a great question, the biggest one is short-term capital. So think about, like, when it comes to businesses, lines of credit.
Yes.
And a line of credit is like a credit card, right? But somebody is controlling how you spend your money, right? You have to tell me what you're spending your money on and how you're going to spend it and how you're going to repay me back, right? Short-term capital. That's actually how economies grow, right? So right before Donald Trump decided with this tariff, Jerome, our guy, even though he's not black, Jerome was on his way.
So you're talking about the Fed chair, Jerome Powell.
The Fed chair, Jerome. Oh, sorry, I have to go. My apologies. So Jerome Powell was about to cut rates, right? Give us down so that he can boost the economy. The business owners. If I'm right now,
get money flowing.
Yeah, get money flowing, and interest rates right now at 7.5%. That's prime, right? Prime, I think, is at 7.5. So if I cut it down, your cost of living and your cost of product goes down, so then you can spend more.
Buy more.
You can buy more.
Yeah.
Right? That's zero.
Okay.
Right? And then tariffs is everything that comes in from abroad. Right? Now the problem that becomes is tariffs and reducing interest rates don't work together.
Yeah.
Somebody has to win. Right? Somebody has to win. If both of them
You
are,
can't have your cake and eat it too.
Yeah.
that's what you said. Correct.
How?
You cannot have that. So what does that do? So when it comes in inflation, when you have inflation, you increase taxes. So you can mitigate what's going to happen. And what is inflation? Eggs should not cost $8.99. It should be at $4.99. Inflation, right?
So now you have to eat
Or
fewer
$2.99.
eggs.
Allegedly.
You now have to eat fewer eggs.
Correct.
And products that use eggs, like cake and
Everything.
many other, the prices go up.
They go up.
Yeah, so now you can no longer eat
Now
cake.
you can no longer
You
eat
have to
cake.
eat bread.
Allegedly.
And then you know
you
what
can't
I-
even have bread
And
because
bread
bread
is also has-
needs an
has
egg.
Yes.
It needs an egg.
You can't.
Correct. So you can't even have it. So these are the issues.
And
that
then Omosh can only just buy one egg,
Wow.
right?
not three.
Yeah.
One.
And things, because I took notes on my little thing, and it's like, you know, so when you listen to DJT, he goes, I'm trying to help the economy. Well, small towns are the ones that are being impacted today. Small towns, small communities, right? Things where little things happen, manufacturing. My pen was probably manufactured somewhere in Biloxi, Mississippi.
Or China.
Let's go with Biloxi.
Okay, so Biloxi,
Yeah.
Mississippi. Sorry.
Right? But then that economy get hurt because
Yes.
now somebody can't do it. Right? Small communities. And what does that mean? Let's put tariffs. So DC, let's put the market that we are in today.
Yeah.
Right? I live in the DMV area. Right? You lay off 80,000 people. 10,000 in the DMV.
Yes.
That means that 10,000 people who ain't paying mortgages, that's 10,000 people who are not paying rent, that 10,000 people who are not going to shop, that's 10,000 people, and
They're not buying lunch.
They're not buying lunch.
Yeah.
They're not buying drinks. So when you look the trickle down effect that like Ronald Reagan used to say, this is a different aspect. That's 10. That multiplier is extremely wide, right? I am not going to go to see Omosh because, man, the cost of gas just went from $3.19 to $5.99. Bruh, this party isn't that serious. And I'm just using it as an example. But, these are the economic impacts of these tariffs. And put things together. A t-shirt for your kid used to be $1.99, now it's $5.99. And it has Superman on the chest. Made in China.
Yes, absolutely. Yeah. So
Right?
that's
Now
Or
$1.99.
MAGA.
Oh my God,
yeah.
Tennessee. But those are the economic impacts.
Okay. Yeah, and I think a lot of people are now coming to terms. One thing I appreciate that happens during Trump presidencies is that people are forced to go back to factory settings and read the law, read what these things mean, because I think people have been very comfortable, like with previous presidents, like with Obama or with Biden, you would find people nitpicking, like certain small things here and there they're doing, but now they're seeing the after effects of what you call very destructive leadership, because this has been a very short period of time. And they've just been blowing things apart, like day by day. And it's like there's something always they have every other day. And then I think there's a comment coming in from Skylar says, unfortunately, IULs are being pushed aggressively with a grow-rich like Ponzi scheme of if you get more people involved, you get promoted to different levels. Yes, that's another thing I did not want to mention. Any business where like the earnings is based on the number of people you recruit, it's called multi-level marketing.
It's pyramidal.
Yeah, then that in itself
That reminds me of many companies.
No, I did not want to mention that, but I will blame Skylar. Skylar is the one who mentioned that. And then Patrick says, all in all, whether whole term life or IUL, the insurance companies will always look for a loophole for not reimbursing you if you die. Just drop whole life and UIL and take realistic term life. It's prudent to have insurance, but don't be very comfortable just because you have it. And then Esther Mulusa says, how do Africans spend more when they have no bargaining power because of economic occupation by big corporations? Why not show the connection between trade and microeconomics? Doesn't the rest of the world matter? The US can do all these good things because they buy cheap raw materials and sell the value-added products to the same poor countries that provide the raw materials. Now, onto what Esther is saying, I think, people also do not necessarily have an understanding of how much I can afford. This is how much I make, and this is what I can afford. I think people don't have an appreciation and a good understanding of that. It's kind of like, if I have the money, let me spend it. One piece of advice that I can give to especially people in their 20s who are maybe in college or just graduating college, one of the best things you can do for yourselves, if any of you is tuned, if any of you has a son, a daughter, or a nephew, a niece, or a sibling, they know, advise them not to leave their parents' home. That is one of, that is one of the best pieces of, do not leave your parents' home.
So
Yes, and I know right now we are gonna think of ourselves when we were in our 20s, when you could rent a place for 300, 400. That's not the case
They
right
don't
now.
Yeah, you're starting at.
That's not the case right now.
1,500
Because like I have a niece, like who is paying, I think almost $2,000
Yes.
for a very small 1-bedroom apartment in Silver Spring. And I'm like, wow, and she's just getting started.
But they have a
Yeah.
concierge.
Yeah, and she's just getting started. So now, if you can take whatever you're making your first 5 years and aggressively invest, stay in your parents' home, aggressively start investing, like maybe let's say you have a first job, maybe they're paying you $80K. Live frugally, you're still living in your parents' home, aggressively save $60,000 every year. You will be in a very good position within a very short period of less than 10 years. You'll be in a very good position that you will not even imagine. You will be ahead of some people who are almost retiring. There are people who are almost retiring, and their 401ks have not even hit $100,000.
So
Believe it or not.
so
I think you know this
No,
better than most people.
I agree with you.
Yes.
1,000%. But the way I look at it, especially kids who are growing up in America, and the A is silent. When you're 22 in America, the last thing you're thinking about is retirement.
Correct.
True. Correct.
Right?
Yeah.
That's the last thing I'm thinking about. Like, and I'll speak about myself. Graduated college here. Last thing I was thinking about is retirement. Today, 20 years later, or 25 years later, now I'm like, oh my God, I should have done this.
Yeah.
But the 18-year-old daughter or the 18-year-old son is not hearing what you're saying, right? And the hardest thing, because you've hit every point, that's what we should have done when we were 18 to 22.
But you know why they do not hear what you're saying? And this is experience that I've had, like within my own extended family, from the group that did not hear and a group that heard. So I have a formula, like if you want your 21-year-old to hear what you're saying. And the formula is, don't start them telling when they're turning 20 or 21. You've already lost them. They're gone. Imeenda. Hiyo imeenda. Imeenda. Kabisa. Yeah.
Imeenda.
Yes.
Imeenda kabisa.
But then, if you start teaching them from an early age, and an early age is when they can speak. There's tactics you can use, like on a 5-year-old. There's tactics on an 8-year-old, and there's a lot of resources nowadays online. Yeah, if you start from the beginning, if you start from there, then by that time, they will be the one who will be. They're the one who will be telling you.
Just log in and see.
No, please.
You
mute
remember the
Micah.
password, right?
Mute Micah.
Mika,
No, mute. Just mute him because we can't.
Okay,
yeah.
sawa, endelea.
Yeah, because it's getting destructive. So yeah. So what was I saying? When you start when you start after high school, that is too late. That's why they're not listening. Now, for those who for those who we've coached from an early age, they're the ones who are telling us that, oh, I picked this account, I picked Vanguard over Fidelity because of this. So and you see with the people who came with parents here, they didn't know what they didn't know, but parents of today, they know this. So one of the best things that you can do for yourself as a 22-year-old, and even when you start telling your 22-year-old when they're 22 ati usitoke nyumbani, you're already late, because they're already being influenced by Heather and Amber and Jake. They're already influencing them.
Wait, where they gotta be Heather and Amber?
And just random names, random names, yeah. And these are people who have trust funds. These are people who have generational wealth. Yeah. These are people who are encouraging them to move. Yet you're a first generation family where your family is still struggling, and now you want to do what Jake, Heather, and Amber are doing. You also have to give your kids the reality. This is our situation. We are not Jake, we are not Heather, and we are not Amber. Yeah, this is our situation. And if you start from a very early stage, they will understand. And even when they stay home, you make them have an understanding. You're only staying home, like if you promise that this money, if there's proof that this money is actually being invested, and you're not just, like blowing away this money.
And you know, just to add on to what you're saying, so I remember my college friends, my white college friends.
Yes, Jake,
Heather,
and Amber.
Yes.
Yeah,
Right? Jake lived until he was 30 at
And
home.
Jason.
yeah. Look at
Okay.
that. Look at
Right?
that. Yeah.
But us, we
Yeah.
were kicked out at 22, 23.
If you're lucky.
If
at
you're
22.
lucky,
No,
you-
Were we kicked out or we chose to move out?
No, we got kicked out.
you are kicked. Oh, okay, Mika. There's different situations. I think
There's a difference because the
Mwaura
thing is this. Let's look at it this way. Also, our behavior is what made us get kicked out.
Tabia mbaya.
So
yes.
we decided to choose behaviors that will make us. We decided to act grown up, and that is why we're
I'm not
told
going
go be
to
a grown up
validate
somewhere.
that, but I understand exactly what you're saying.
Because you can't go to your dad's home
But-
like anytime you want.
But they're
you know,
different
and that's
trains.
what
They're
they
different.
wanted.
You know, they're different trains. You see, like Mwaura was here with his parents, and a lot of us didn't come here with our parents or not here with our parents. So it's
That's
like,
different,
So
yeah.
you basically you already out.
Yeah.
You understand what I'm saying? So you didn't have that that parental figure and all of that. But now
Yes.
our kids
London.
here have that, and this is our opportunity to shape it for them. And because we already see where this
And
path,
then-
where this path is going.
Correct. And you know what?
So, in
terms of what you were saying,
let me add on to something that Ali said. They had a thought process that and it was disappearing, right? The thing is this: most parents might not actually think it through, but it's cheaper for you if that kid stays in your house than it is cheaper if they moved out. Yes, they will get a job, they will pay rent, but you know, when they come back for you, it's to you to ask for help. It's not going to be for $500, $100,
Nope.
$200.
No.
It's going to be huge money,
Yeah.
right? They've decided to move out, yes. You go visit them, you look at how they're living, and you're like, you don't have a couch? This is how you're living? All right, I'm going to get you that couch.
Yep.
Last $5,000, boom,
Yep.
gone, right?
Yep.
and also something that's very different, like growing up in America. Sorry to cut you off, Mika. Growing up in America and then growing up in Kenya. When I went to high school, even middle school, I came home every day. Versus when you're in Kenya, you go to boarding school,
Yes.
Yeah.
right? So there's a different
There's a
aspect
difference,
in
yeah.
how you look at things. And now
Were you in boarding in Kenya before you came to States?
Professor Son?
Were you in day school or
No,
boarding school?
day school.
Okay, that's a big difference.
Yes, but I think Mika brings
Because-
these points that sometimes we don't see. You know, like first of all, as a parent, if you're looking to help your child, especially in this kind of economy that we're living today, you know, things were easier when we were in our early 20s.
It sure
Things
was.
were much easier.
It sure was.
Yeah, things you could work, you know, like a minimum wage job and still
And
afford.
still be able to afford an apartment by
Yes,
yourself
by
without
yourself.
a roommate
Without a
and worrying
roommate.
about gee, those crazy insurance rates.
that is-
and you know
that is no longer the case. You know, like there's a 2-bedroom apartment that I used to live in before I bought my current home. And believe it or not, that 2-bedroom apartment, and they're not very far from each other, they're like 6-7 minutes from each other. That 2-bedroom apartment now costs way more than
your
what
mortgage.
I'm paying for my townhome. You know, and this was 2018. 2018 is when I bought a home, and now it's costing. Now I'm like, if I'd stayed in that apartment, I would have been paying more for a 2-bedroom apartment than what I'm paying for a mortgage. So there's certain fundamentals that have significantly shifted in this US economy,
Yes,
and we
economically,
have to be realistic about it. This thing of ati, oh, my son has graduated, wacha ende akajifundishe, you're sending him to the wolves. And even
Hiyo-
worse,
hiyo
a
na
daughter.
nini ati sasa nataka wajukuu endo nizalie.
You know,
You do not know how far back you're setting those kids.
by the way, hata hiyo story ya nendo kanizalie, I think if they're doing it in a legit way, meaning they're getting married at a young age, I think parents should be comfortable to support young couples. If it's a couple, you know, that's maybe like 25, I'm not going to discourage people to get married young, because the shenanigans that used to happen when we were in our 20s, I think it might even be worse right now. But if a couple decides to get married young, I think parents on both sides wanafaa wakae pamoja, wajue vile watawasaidia.
The
What
village.
was idea? Yeah.
Yeah,
village.
the village should come
That's
in.
the
But
village.
I'll
Yes.
say this: for you to successfully engage what you're talking about.
Yes.
Like Mwaura has said,
Yeah.
these things need to be executed when you need to start planting those seeds when these children
Are young.
young.
Yes.
When they are 4, 5, 6. I'm not saying that you're prepping them for marriage or whatever. No,
No.
but you're just prepping them for life.
You're prepping them for life. Yes.
And I say life, simple things, like nguo, kufua nguo, panga,
Or
make
even
breakfast, spending,
Yeah.
vitu ka hizo.
Yeah.
My own daughter one day came and told me I want to talk to Uncle Ali. What did she
Yeah.
tell you about?
Yeah. She was asking me about stocks.
Exactly.
Yeah. She
So
was asking at
and
a
how
very
old
young
is she?
age.
12.
12 years old.
And she was
13.
asking. She
Oh,
didn't
yeah,
ask about IUN.
No. She wanted to talk to Uncle Ali.
Yeah. And you see,
So
it's
those-
very important when they start at that age.
And these are things that as parents you instill. What we're talking about right now here is what you instill. You instill in them young. You instill, these are the fundamentals of life. If you are whatever you are, at one point probably you will want to cook for yourself. You have to cook for yourself.
Yes.
You have to shop for yourself. You have to know what you want. You have to understand kama ni flavor yako ya nguo. You have to
And to
understand
budget.
to budget, like whatever, like understand. You don't have to go and buy a $7,000 watch
Yeah.
when you live in a $200 apartment.
And it's
Like,
very simple.
unaget.
When you go, if you have a child, do this experiment. Sometimes you may go out shopping and you tell them pick whatever they want. Do this experiment. Tell them you have these $30 and this is all you can spend. The things they would pick are very different from what they would pick when they
If
know
you're
that
paying
will
not have
try-
whatever.
Yes.
And
Very
you
different.
bring in
Paying
a
for it.
very
Yes.
you bring in a very strong point, Ali, because one thing that most parents don't realize, and unfortunately, it comes, especially parents my age, like most of my friends, most of me and my friends right now, we have
What are you
kids
trying to
who
say
are
about us?
between preteens to teenagers, like older kids, and you always want to provide everything for your life. You want your kid to have a soft life. You buying them stuff, and you find people actually say that if I'm wearing Louis Vuitton, my kid is gonna wear Louis Vuitton. If I'm gonna do this, my kid is gonna do this. But then what you don't realize is that you are earning money and you're teaching somebody opulence from a young age.
Yes.
And the moment they start earning money themselves, they realize that you have an advantage over them because you've been working for more than 20 years. You build that nest. You have that financial capability that they never have. And you might have taught them all good money habits well, but you taught them opulence.
Yes.
You taught them that in life, unafaa kuvaa hivi na hivi kutumia hizi vitu. These are the things I'm doing.
Yes.
And guess what you've created? You've created a person
monster.
who doesn't know how to budget. A spendthrift, atakuwa na waste pesa, hatakuwa na kitu yote. So I usually try to tell people who we are parenting together at this particular moment together. It's like once in a while you can throw in an expensive gift, but teach them living within your means is not a bad thing.
It's not a bad thing, and it's very. You remember
It's
eating
very,
life
very crucial and
in this
important.
age of social media. You remember eating life with a big spoon.
Because of social
Soft
media.
life.
Yeah, because you see, what happens is that there's certain things, certain aspects that are amplified about the lives of certain people, and they post that on social media continuously, and you tend to think that this is how they're living. Now, here's the interesting thing. I mean, we've been in banking. One thing that when you're in banking, you get to know is that the people with the most money move in silence.
You don't see them.
You don't see them. Or it could be the guy, like standing right behind you in a grocery store.
I saw somebody say that money isn't loud.
Yes, like
That's a true story.
yes, you don't see them. Like you will not know. It's not like they don't have like certain extravagances on the side, but people with big money, like people who are gonna go and get into a deal worth $50 million, $100 million,
they move
just
in
like
silence.
that. They move in silence. That's one thing that people need to understand. All this loudness of go spend this money, and this is something that mostly affects people within the black community. I see Africans with a lot of it too. And then people try to guilt trip you at huyo hapo, or he's a stingy guy. Why is he stingy? Because he refused to buy you a drink that's $115. Call me stingy. Yeah.
And I know he drives what's that motor called, the Range Rover that starts with the A, Micah, ile Range.
Vela ile ndogo ile inakuanga na engine ya Ford.
Hapana, wacha hiyo, ile range nyingine ile waga ya moto.
Yeah.
Ama tuseme Brobus. Mtu ako na Brobus lakini hawezi kukubaya drink ya so moja.
Mtu anaendesha nini inaitwanga? Unasema Overfinch.
Hata hiyo.
Si Brabus ya engine ya Overfinch.
Yes.
So the point is
we have floated, but
so I think the point is, if you start teaching, because kids, very interesting
At
thing
5,
about
6.
kids pick up things that you do.
Yeah, they need to know
things that you do.
the piggyback, the savings account, all
I
of those
think
things.
so I think, and none of us is perfect. We all have, like our weaknesses. But I think, like when you're trying to train your child, think about this way. As a trainer, your kid will mostly pick up not necessarily what you say, but what you do. So if you have those things that have not worked so well for you, that you've been doing, try to do them in a way that your kids are not seeing. Na si ati unajificha, ama you're just trying to give them a better shot.
Let me give an example. It's very true. Kids will not listen to what you say.
Yeah.
They'll watch what you do.
They'll watch what you do.
Which means that what you listen to,
Absolutely.
what they know, that, let's say, for example, if you guys are driving, or if you're on your phone or whatever, if you're at home, whatever, if, let's say, or even when you're talking like now, for example, and especially this habit, some kids get smart enough, they start learning Swahili. They start learning Kikuyu. They start learning your mother tongue or whatever.
Yeah, they pick it up, yes.
They pick it up. So then they will listen. So whenever, if you're talking politics, and then they will feel that energy. They will understand. Your kids will understand you pertaining to certain matters.
Yes.
Political, your affiliations.
All those things.
All those
they are a
energies.
combination of all those things that you constantly do.
They will get that stuff. Trust me, they will pick up.
So you can't speak in your mother tongue to hide things?
Even
at some point, you
know how I know this? Within our extended family,
yes,
the people who smoke, kuvuta sigara, all of them, without a fail, had parents who are smoking. Like, it is so profound, like when we sit
Habits.
as cousins and we discuss, and now they're talking about not smoking in front of their kids, is, like all the ones in our group who smoke, so their parents are doing it. Yes. And it's kind of like how, was it just a coincidence?
And this goes back to
that's what shapes you.
But you see, this goes back to what sometimes, like we were talking about, we've been discussing how sometimes we isolate our kids. We want them to be Kenyan. We want them to be Kikuyu, Luo, whatever, it doesn't matter. But we go out of our way to speak our mother tongue to isolate them.
Yeah.
If I don't want them, if
put them aside,
to put them aside. If I want to talk about, let's say, Ali and whatever,
that doesn't apply in our in our setup.
I was gonna say
no,
something different.
that's fine. That
doesn't apply in our setup.
No, you see, Ali,
But
you guys,
it's something that I've experienced.
I was
I've
gonna
seen,
say
and I
something
am.
I hear what you're saying.
I am
Ali,
culpable.
just
I am
hang out with
culpable.
it.
I am
Hata
guilty
hizi
as
mabashi
hell.
tulikuwa tunaenda hizi house party.
Yeah.
You would usually see when people have kids wanakuja na watoi wanapiga story. Mkitaka kuwasengenya toka nongea Kiswahili.
Yeah, but sasa
Like it's simple. It
sasa
is
si
just
watu wetu.
and I think what Uno is trying to say is that instead of teaching them things like hizo languages to continue them learning the language and the culture, tunakata kuwafundisha so that we can have a way to talk about them.
Yes.
Yeah,
That's all I'm saying. And
is
this,
not
or have discussions that they would not understand or be involved
and
in.
this goes also now, that add on to that, like if we really want to teach them finance, we want to teach, because like Mwaura and Ali said, you can't teach them when they're 20.
No, that's
Oh, no.
late.
No,
That's
no.
that old dog.
So you
that
start-
can't
you
be
start
taught.
Even
early.
15,
Correct.
16
No, no,
is
no.
already
No,
late.
he meander.
Yeah.
That
He
went a
meander
long time,
kabisa.
yeah.
Yeah.
You start at 8. You start at 9.
So-
you start at 7, 6.
By
So
8
the
you should
best
have been doing it.
So
You
the
should-
age
yes.
of
By 8
the
you
ages
should have
of
been doing it.
maximum influence are between 7 to 14.
No. By 9, you already started. At 14, wameanza kumea pembe.
And
They're teenagers.
ndo nasema
He
maximum
said between
influence.
7 and you.
Of course, you
that's
have to
your
start
range.
early. You
The
have to
seed
start
has to be
before
planted.
7.
The
Yes,
seed has to be
correct.
planted so
Yeah.
early.
The seed has to be planted so
By
early.
8, that
Like any-
if that child is getting to 10, your seeds have already planted. You've already
Yes.
planted those seeds and you're watering those seeds.
Yes, you have to determine those priorities.
Mapema ndio best.
Yes.
Walai bilai.
Yes.
Mapema ndio best, lakini pia we should also consider, like, we have parents who have who come to get with their children later in life, maybe because ulikuja huku umeacha mtoi Kenya,
That's a
it's taken
different
your fear
situation.
to settle down ukwaleta huku. So we also have to consider, like, to consider and say, like, yes, mapema ndio best, but any chance you get, what you've learned, what you've get, it's best to share that knowledge and teach that knowledge.
Yes.
Especially if, let's say,
Yeah.
if let's say you're bringing somebody into this country, wako high school ama wanaingia college, you have to sit down and start teaching
And
that to
explain
them.
and also explain it. I think there's that thing of I'm your parent, I'm telling you, not okay, this is the way the world is shaped, and based upon the pitfalls and the holes that I walked through, this is what my advice for you is. This is the path you should take. You should go down this way. Boom, 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 boom. Any support you need, I got you. I got your back. But if a lot of times as parents, because of the way we were shaped, by our parents, where it was basically an authoritarian rule where it's like, it's my way or the highway. Basically, if you're living in my house, it's my rules. So that's how things were brought down to us, and we tend to either replicate that way or we go the total opposite, where we just let the child go and say, I don't want my child to be the way I was raised up, so I'll let them do whatever the heck they want. And then it becomes too late because you're back at that point where we're like, they're 20 and you can't shape. And you already see what's going to happen to them, So we really have to be very, we have to be very, I was going to say categorical, but maybe that's not the right word. You have to.
You have to be smart about it.
You have to,
You
okay,
have
yeah,
to
you have
be
to be smart.
cognizant
Yeah.
about it. You got to
you
understand.
really have to pinpoint, right? Go aim for it straight and don't beat around the bush.
And I
but
think-
explain, because these kids, you have to explain.
And
to
I think
them
you also have to
for them to get
understand.
an understanding.
Yes, I think you also have to understand what other influences are there on your kids outside the home. It's important to have an understanding of those,
Yeah.
because
Yeah.
most parents sometimes either ignore or don't know, and sometimes you may not be in a position to know everything. This is where having like a village or as a community that where parents can sit and discuss these things to help each other, which happens a lot sometimes when we are sitting like in mosques, for example. I don't know how the church setup is.
Same thing.
They talk about these things, like people. I know that's religious institutions are things that are being that people are not people are not quite taking them seriously, but they play a very important role in teaching parents. These are some of the influences that your kids are experiencing when they go to school, when they go to the neighborhood, because the influences are way more. The outside influences are way more than what outside influences we were getting growing up. Because now there's social media, which I think is way more potent than TV. Because TV was restricted, what shows are showing, what shows kids are watching. But with the internet, there are so many other things. And then there are so many things, like my nephews were telling me that drugs are a normal thing. They are a very normal thing in America. You went to an American
I was
school.
going to say, I have something to say, yeah.
Yeah, so you probably know that better than any of us. Me, the first time I was like, drugs, I was
It's
completely
normal.
shocked.
Opioids,
And they were
drugs.
shocked at me being shocked.
Yeah.
When my nephews were telling me, they were shocked at me being shocked. They were like, Allah, Kwani, you didn't know? This is very normal. People come and sell this stuff
Yeah.
in school. And those are the things that a lot of African parents,
They don't know.
they're oblivious.
And
They don't
vaping.
So, you
By
know,
the way,
like-
vaping is
That's
so,
another
so
thing.
like being Kenyan American, right? Kenyan American, right?
Mm-hmm.
I would say Kenyan American, right? So everybody he makes fun of me because my Swa is awful, but my Kikuyu is ridiculous because of my mom. Only thing she talked to us is in Kuk since
Okay.
1989.
I felt that.
yes,
I felt
yeah,
that
yeah,
track
because
hit
yeah,
me.
those
Right.
because the parents, yeah, they were always
Right,
like,
that
I'm only
influence that you
speaking to
guys are
that,
talking
Yes,
to, she
and
never,
you see, you
she
have
never,
it for a lifetime.
and I've had it for a
For a
lifetime.
lifetime, yes.
Now they never talk to me in Swa, so that's why my Swa is awful.
Oh, okay.
We'll fix that. Don't worry about that.
Well,
yeah.
your Swa is
No,
different.
no, at a small fee. At a small
At
fee.
a small fee.
Yeah,
It's
you
share.
a commercial lending fee. A commercial
That's right,
lending
I got
fee.
you.
Yeah.
I got you. Have it. 50
But like I
bits.
said, you know, you can't redirect, you know, a guy who's like 75 and try to teach him Swahili like, hey, mambo vipi kazi, whatever. It's a process.
Yeah, it's a process.
It
It's a
is.
process.
Where there's a will, there's a way.
Yeah, so
Well,
you can pay.
and even like the process is who you put yourself around, right?
Yes.
So I always say this, right? I'm extremely Kenyan during the summer. Find me in January. I'm American because we don't interact.
Got it. The
You know,
outdoor
like we're
activity.
not
yes,
hanging
yes,
out.
The Kenyans hang out outdoor activities.
Summertime,
around
correct.
Yam
I am
Chom, gathering.
I'm a
got
beast.
it. Got it.
But in January,
got it.
I'm as American can be,
Heather, Jake.
right?
Eating
Oh,
cheese
And Amber,
sandwiches.
don't forget Amber.
Amber.
Don't forget
As
about
apple
Amber.
pie.
Yeah.
As apple pie.
That's
Yeah.
why sometimes we don't take you places.
Oh, sorry, my bad. Dang.
So there's comments over here on
True.
YouTube. We neglected them kidogo. Dennis Wasonga karibu, and he was talking about folks don't really plan for wills.
That shipper needs to
That's a good one. They're
sponsor
not-
on the show.
Oh yes,
They're
yes,
not
yes,
in
yes.
Indianapolis. Yeah, that's a
Yes.
good one.
Yeah,
That's
he's a
good
guy.
one.
He's a
That's
guy of
good one.
logistics, eh?
Oh yeah.
Yeah,
Sponsor the
Supply chain, nini.
show.
Malize wa comment yake.
So Dennis,
Omosoma comment.
folks don't really plan for wills, trusts, under agreements, etc. They have employer-based life insurance, but don't leave any further instructions on what is to be done if they expire. This thing of expiration, wills, trusts, yeah, we are gonna come back to this in our
That's
community.
a whole subject. Like
That's
needs-
a whole show.
That needs
That's
a whole show.
Yeah.
Yeah.
Because everything that the IULs that we were just talking about go into that. Like that one, wills trust is a subject we can do for hours. So I'll leave it alone.
And then Wairimu ule wa asemani Coast ya Magharibi ama
Coast ya Magharibi.
Oshio.
Okay, West,
Gaiveka wa coast.
She was saying decreasing interest rates when an economy is contracting leads to something similar to 2008 over leveraged consumers, but with no money to pay the debt. And then she commented again and said, Ali is right. Most Asians and Hispanic kids don't move out early. Some actually wait until they have their own families. So, you know, that community thing. And I think even with the Asians, I don't know if theirs, theirs literally, I have an accountant who's Asian. And so he is the accountant for their temple or whatever it is, right? And he does their stuff. But in his house, all his kids, even though some of them moved and went, you know, they have their own houses, but at some point he was telling me they had one bank account. Everybody, all the kids who are working of working age, they work out their money into one bank account. And I cannot imagine, it's like, okay, let's say you have 4 kids, they are grown, they are working, and they're living with you, and they've worked out all their money in there. How much money do you think is that account in 1 month?
Yeah, no.
And then they use that to leverage and do different things. And you know, he's in business, and you know, so it's very interesting.
I'll tell you guys one thing that that is very controversial. Now you see, Africans, we used to live in communities. You know,
Correct.
that's how we used to live until we were convinced otherwise. We are copying, you know, like a system.
And they're no callers.
From we are copying a system from what do you call it, from white people,
The Western world.
who from the Western world, who had a very different situation. They had generations of free labor, generations of stolen resources. This wealth that you see today and this is not me, this is just the reality.
It's facts.
Yeah, it's facts. You know, it's generational wealth based on a lot of pain, a lot of torture, and a lot of blood. And this is the wealth they have. So because of all this wealth they have, they can go into the little separate nuclear spaces and thrive. However, because we do not have the benefit of 400 years of stolen labor and another another 100 years of colonialism, you know, because that's a lot of wealth. When you think about it,
It's
a lot of stolen wealth.
Man. It's a lot.
Because we don't have the benefit of that, and then now we start saying that we're gonna live into the system in which they want us to live, because it benefits them more. If the four of us, for example, let's say we are brothers, if the four of us live in one house, we can survive with 1 or 2 cars.
Correct.
But now because the four of us are living in 4 houses, we have 4 different cars, we have 4 different electric bills, we have 4 different water bills, and guess who owns the utility companies? Guess who owns those companies that are selling you the cars? Guess who owns all those things that you're consuming based on all of you being in separate spaces? Because I'm thinking of, you know, like a child who has moved out at age 23 and they've gone somewhere, they're paying $2,000 in rent. Guess who owns that building where she's paying rent? So that's money, that's wealth that's coming away from the family, that's going somewhere else. So I think we need to seriously rethink, because one of the argument that comes out, I need my privacy. You know, I need, but what is that? What is the cost you're getting out of getting that privacy? You know, because if you think of how much money you can save and invest over time, because think if it's 4 people and you're all paying $2,000, that's $8,000 a month. When you multiply $8,000 by 12, you're talking about almost 100 grand in a year, in 1 year. 100 grand, it's just gone.
Yeah.
Just like that. And it's building someone else's wealth who doesn't need it as much.
And I think sometimes it's something that you touched upon during colonialism. You know, after colonial, we were told to be separate.
Yes.
Right? Be separate, right? And
Hiyo ndo maendeleo.
Sindio.
Yeah.
And everybody does their own thing. So, and we take that mentality, it's just me or die.
Yeah.
Right? I don't want to live in an apartment with three roommates. I'm gonna go spend more so I can be by myself.
I can get my own space.
My own space, as you said.
My own privacy.
Yeah,
my own privacy. But then the guy who is $1 million, the Dunkin' Donuts guy, is living with 8 people.
Yes.
And he owns 5 Dunkin' Donuts. He's making $2 million a clip.
So I think we need to think. We need to start moving very differently
And that was
thinking very differently.
to support his point. Think about it when we were doing career, when we were in high school. Most guys, you know, it was interesting that, you know, when we were in high school, ama primo, kila mtu anajisomea. If I have a problem with a question pertaining to math or chemistry or physics or whatever, if I go to Ali, atambia, hey, you know what, me, I guess this I'm not sure. But sure enough, when the exam
so that
comes,
you don't beat me.
Exactly. So when the exam comes or whatever, atanichapa. But here, we understand, like even when we came to Kole over here, you know, it's not about everyone is put in groups. And each group has been given a task. Like you have to do, it's a project that you guys have to do everything.
Yes, you have to work
This
together.
is Kole.
Learn to work, you know, as a team.
Correct, yeah.
And this doesn't start at Kole. Then you start, you know, like when you get kids, you know, you start seeing this thing from when they're toys, like, you know what, you guys are a group, you're being given whatever. It's not about being number one. It's about collaborating. It's about, you know, linking up.
And
like
it's about teaching you about life. Not
about
everyone.
life.
It's not everything
not
that's
alone.
going to be 50-50.
Yes.
There's always going to be people who will put in just a bit of work and try to take credit.
And
so that's teaching you. That's how life is.
And that has handicapped us Kenyans of our age. It don't about, and the problem is we don't know if we have instilled this in our kids. Hatujui.
Yeah.
But I can say that when it comes to us, age group yetu.
Yeah.
I don't know about Kinamosh, but age group yetu.
So you see,
we are in a bad position where it's a struggle
It
to
is.
detach. It is
Yeah.
a struggle. Ukisikia msee anajaribu kutafuta mbinu za kufanya kitu,
No,
It's
you
a
see,
problem.
the benefit that,
I love you, my brother.
the benefit
Omosh.
that,
Backward comment.
the benefit that those of us who come from Muslim communities have is because you understand, we Muslims do not move with the crowds. We have these systems that work, and whether you like it or not, you're told this is how you're supposed to live in brotherhood. So wherever the world is going, whether it's going this direction or that direction, so those values, even if they're not necessarily enforced, but they're things that are constantly being taught.
And at what age do you start being taught this?
Oh, very early.
Thank you.
Oh, by the way,
I'm going back.
like-
I'm always.
Yeah.
I will always go back to when we start instilling this in
Yeah.
our children.
Yeah, by the way, like I sometimes feel I went through, and I didn't realize it at the time, but I feel like I went through two different curriculums of education, because when it comes to the Islamic education beyond the Quran, there's so many other things that we learn, and it's a very different kind of education from this Western style education that we went through, because it was totally opposite. Huku unafunza ubinafsi. In the Western style education, you're taught self-reliance
Selfless.
na nini. Huku kwingine tukienda madrasa, unaambiwa
Umoja.
hapana,
Yes.
lazima muwe pamoja. If you're the one who's making money, you're the one who's supposed to be holding up the other people who are not making money. So it was a very different, like huku naambiwa hivi na huku naambiwa hivi, but I think in the long term, like I did see the benefits of it later on. And I think we as Africans have to start figuring the priorities within our education systems.
And I think, and I could be wrong, and it's still in this umbrella and context of the conversation we are having because of what is going on, because it's like we're being given a gut check, a reality check. Like,
Yes.
okay,
Facts.
like whatever DJT is doing, then you sort of have to start doing a self-assessment.
Absolutely.
Like in terms of like in Africa, in continent, we've had, Bandio posted a video clip of now the US talking about shutting down 30 embassies.
30 consulates, yeah.
30 consulates. Now, what does that mean then?
Yes.
Because what
In a very selfish way, we have to be self-independent. Right?
and that's the thing.
start
we have to learn to
to
rely on
learn
ourselves.
on ourselves.
Yeah.
And guess what?
Right?
Like when you
And-
look at the continent and all the resources that we have, it is possible for us to really rely on ourselves.
Now, you see, the thing is, the African continent, also when you go to the Middle East or any of these parts that the Europeans colonized, they made sure when they left, they built or created those places in their image. That is what they did. So what they did, they were very masterful in how they did this. So Africa, the modern borders that we see today were crafted in the Berlin Conference. I'm sure most
Yep.
of you learned about that
The Berlin Conference in 19
in high school. And then the European, the Middle East borders were created using an agreement called Sykes-Picot agreement. So the people in the Middle East were affected in a different way, in the sense of their leadership. They still maintained most parts of their culture, but then in Africa, we, especially French West Africa, mostly like affected in a very severe way, by those by those systems
Franco-Frank
that are left
Yeah.
behind.
Yeah.
The Sahel is trying to divorce itself right now from that system. So I think we now need thinkers. We need different kinds of people to start designing and thinking of what type of Africa we want moving forward.
So what are your thoughts about the president of Burkina Faso, the young general?
Yes, I mean, I love what Ibrahima Traore is doing, in the sense that I mean, I don't have details of what he's technically doing, but people are very happy with him. Like at least from what we are seeing.
So he took the biggest thing that he did in my eyes, right? He took the central banking system from France.
Yes.
right?
So
And
that's a big deal.
that's a huge deal because it's a mining country. They do a lot of mining. They do a lot of oil. So there's a lot of deposits that go into it. And that, to me, makes a lot of sense, right? When you're taking the mining, that's where the money is, right? And now it's being sent, and hopefully he does the right thing, and he reinvests that money into the economy of Burkina Faso. But
So I think what the Sahel countries, it's not only Burkina Faso, I think a number of the Sahel countries are actually doing that. And they're divorcing themselves from countries that have Western puppets. Like Nigeria right now has a president who's basically a Western puppet. He's someone who had issues here in the U.S., had legal issues here in the U.S., but he's now, he's a president there. So I think we have to rethink the whole idea of it, even especially when we're going to educate our kids, because I think problematically we sometimes prioritize economic issues, like ataweza kupata kazi akimaliza skuli. So I know that's important. But there are some other things that are more important than that are being skipped. For example, ethics. Right now in Kenya, being unethical is totally accepted. People will vote for you.
Yeah.
If you're an honest guy, no one will vote for you. But if you've stolen, if you've killed, if you've raped, if you've done any kind of shenanigans, as long as you go and distribute, like 100 shillings to people in the villages, they will vote for you.
Yeah.
So I think the problem is
and they do it live. They show you.
Yeah, they show you. They do it live.
Right.
We used to have politicians who had values. Like if you go back to the 90s, even up to the 2000s, you had politicians who had values. Like the Mwites, the Gitobui Manyaras. But these people could no longer win elections because they were honest and they had values. Now, you wanna win an election.
You have to be corrupt.
Yeah.
You have to be mother than you.
Yeah.
Yeah.
You have to be
Be involved in very big scandals.
I do my best to stay away from politics because everybody's right? Because everybody's opinion is their opinion.
Yeah.
And their opinion only. So
but you know what happens when you stay away from politics? We get President Trump.
You ain't lying.
Yes, that's what I tell people.
You
stay away from politics.
Yeah.
So I think there's a sanitized, there's a clean way in which we can engage in politics. I think because politics has become so toxic, both in the US and back home, that people feel like.
But you can't have discourse anymore.
Yeah.
And I think, and that for me, that is why at some point I even know some of my friends who themselves, when it comes to politics, Mambia politics, even certain groups, they just chomoka because it is so polarized to a point where it's so polarized to a point where you're this is a headache, and this goes even to now, for example, like what's going on with 401k, when you're looking about what the tariffs and everything, because guess what, people now are like, fuck around and find out. It's FAFO time right now, and most people are experiencing that. Effect. It's in full effect.
Yeah.
And in as much as all of us, yes, we are umiaring, but we're looking at those people and they're like, yeah, whatever. And I'm like, you know what? Kula yo, because you made your bed.
Yeah. Guess
you
what?
lay in it.
Lay into it. Yeah.
Republican 401ks are also going down.
Oh yeah.
Everybody.
Yeah. They're going down.
And at some point, eventually when it all settles down, I remember one point where like you look at McCain and you're calling McCain out, you're calling him names or whatever,
Right now.
and you're like, oh man, this guy, and you're like, I wish we could go back to that time of John McCain.
Forget about even Mitt Romney. Even
Romney looks like an angel.
Yes.
I mean, Romney speaks now. I'm like, oh my! I wish we had a President Romney. Like we have gone so low.
A person who could, I remember when John McCain came and repudiated a mama who was talking,
was trying
calling
to,
Obama, like no, grab the mic.
Yeah.
You have a guy who.
Those are values. Those are very strong values. Yeah.
Right.
Those are very strong values.
And then you have people who support DJT, who call themselves Christians, But whatever he has done, have been accused of, or whatever has happened to him, is a non-issue. But he's an upright man. He's a right man. And I'm like, you got to be kidding me.
Yeah.
And it's one of those where, in as much as Bandia was talking about, you know, listening and trying to understand what their position is, and then, you know, maybe base whatever, because I remember that conversation where Bandia was talking about, you know, like listening to somebody because that is what they understand and
Yeah.
can educate and correct. But at some point, you just cannot manage my challenges.
There is a red line. you know.
And the thing with DJT, he's not a liar. He's told us everything he's going to do.
And that's the thing. He sure has.
And
Not only tell us, he wrote it
he
down.
wrote it. And then if you look at the interview,
He wrote it down.
Remember in the 80s, he did an interview with Oprah Winfrey.
Yeah.
And everything in that interview, he's doing today. He was a Democrat. He said, I run as a Republican.
He sure did.
Right? And he said, this is what I'm going to do, and this is how you're going to see it. So we could be upset at him, but he told us everything that he's doing.
It's not. It's there. It is open.
So
and
now,
right now, what's happening, you know, because of, you know, the Supreme Court 6-3 decision to give the presidency immunity in actions that they conduct. I'm talking about the presidency.
Yeah.
I'm not talking about DJT. I'm talking about
The
the presidency.
Yeah.
The president in power can do whatever he wants.
He can even deport green card holders. And you know who they're coming for next? Naturalized citizens.
Yep.
You're next.
Yeah, I know people thought that, oh, you know, like we're safe. No. They're coming for naturalized citizens next.
The gentleman, I think we're having this conversation with Omosh. A guy in Florida, born here, in Georgia, gets arrested, is accused of being an illegal immigrant or whatever. A 20-year-old young
20-year-old kid, his mom. Yes, I saw that today.
Of course, he's a Jose Luis
Yeah.
profiling, and he's told the guy goes to court. What happens if the judge says, okay, everything is, but this is a federal, because the law that was signed by Ron DeSantis, if you are caught with, if you are in the company of somebody who allegedly does not have papers, that becomes a federal crime. So the state, whatever, inafika hapa. So the state judge does not have jurisdiction on that. So you have to stay in the cooler for 48 hours.
So
that is the law that was.
So what they're saying? So
DeSantis.
you go federal? No, I'm asking.
So no, once. So me and you are driving.
Right.
I don't have makaratas.
All right.
And we're in Florida, I get stopped.
Right.
I'm a passenger.
Right.
They find out whatever they run.
Yeah.
They don't have whatever.
Uh-huh.
So me, I get detained. You will get detained. You get a federal charge.
So I get a federal charge.
You will get a federal charge for
being in the
being with. So I'm with you, being in the company of somebody who does not have papers. Then me, I'm detained because it's a federal charge that I don't have papers because I'm here illegally.
But how do I know you don't have papers?
Right.
They will
I'm in
run
your
my stuff
company.
or whatever.
No, but if I'm in your company,
they will provide.
no, how do I know if they're gonna charge me with being in the company of someone who does not have papers? If I'm in your company, and
See,
you
they'll
don't
just
have
ask you
papers,
for your either your social or your
so-
paper. They'll ask for
So
papers
what
or
one might-
something.
your
Your
passport.
no,
Ali.
but I think what one Mike is saying is if you're caught in the company of someone who doesn't have papers,
Yes.
then you're also charged for being in the company.
no,
or is
no,
that what?
No.
No.
You're an accomplice. If you've stolen,
Yeah.
if you go and commit a robbery,
Yeah.
right? You drive the getaway car. You become an accomplice.
Yes, you're an accomplice. You drive the getaway car.
Exactly. So the fact that in my car, a passenger who does not have papers, that guy is in my car, I am an accomplice.
So I have a random question.
And
right?
that is Florida, by the way.
Yeah.
So in Florida, so every time I go to Florida, I have to ask somebody gets in my car, hey, when am I not?
Yes.
No. Okay,
Right.
let me.
You might as well.
Let me explain this. Let me explain this better.
All right, go ahead.
The law actually says, and what it says is that they basically illegals. If you're illegal, you're not allowed in Florida.
If you're undocumented.
Okay, whatever they
Undocumented or illegal? They're two different.
Whatever you want to
No,
call it.
in Trump's,
they are the
all
same
the
thing.
same thing. Yeah.
Okay, gotcha.
That's what the law
They're
was
deplorable.
in 2023. Okay.
Yeah.
So what it basically means is this guys drove in from Georgia, crossed over into Florida, right? Which means you entered Florida illegally. Okay, they got pulled over, and when they were pulled over, this guy was a passenger in the vehicle.
Right.
Okay, the drivers asked for his credentials. He gives his stuff. Then now they ask about all these other guys, and once I asked about all these other guys, Jose is there, and they're like, "Oh, well, you clearly are not. You're clearly not American, so we're taking you in, and in the state of Florida." It's illegal. You've crossed in. You're an illegal. You're illegally in. Not you're illegal. You're illegally in Florida.
Yeah.
Because the law in Florida says you cannot be there if you don't have papers. Pretty
gotcha.
much.
Okay.
So that's what happened with this guy. The caveat to this with this guy is that this guy was actually born in America, but spent a lot of time in Mexico.
Yeah.
Okay. So his fast go-to is he'll roll into Spanish, but he's American, clear as day. And had to go to court, state court. Okay. Now, because now you have put in a state law that is enforcing federal jurisdiction is with the federal court, but the state judge saw the papers and said, okay, this guy actually has his papers. Here is his birth certificate. It's a legit document. Everything is good, but it's not in my jurisdiction. I'm not a federal judge. I can't release him. Because it's now a federal
I think
case.
I read
Walai
that.
bilai.
You see what I'm saying?
Now it makes sense.
So this guy is going to continue to sit in there. So basically, in essence,
you're making sense,
you know, basically, in essence, the way we know that,
down.
you know, whoever is driving a vehicle is the one who is normally carded. No, they're carding everybody.
So, but the thing, and because you said Florida, so
It's
I'll
Florida.
leave it. I'll leave it
It's
Florida
a Florida
because
law, yes.
because in
Florida
Maryland, technically speaking, we don't have that stuff. You can't ask your passengers
No,
for
you
the
can't. You
IDs.
can't. Yeah.
They don't even,
Right? Like,
Yeah, you
right?
can't.
Only the
Let me
driver,
ask you
whoever
something. So in
committed,
Florida,
right?
yes.
In
So
Florida,
Florida-
you're an Uber driver, and you're picking. So you're an Uber driver in Florida, you're picking up somebody. You say, Ali, yes, do you have papers?
So that's
I
what.
guess. Probably.
Okay, so
See, that's
so
what
I don't-
Stephen
so the
JJ is
so the part- the
asking.
part-
What if you're in an
Yeah,
Uber?
that
What
doesn't
if
make
you're in
You
an
know,
sense.
the
Yeah.
part
Uber?
about the part about being an accessory or that, I don't know about that. I just
Okay.
know that the law says that if
You're
you
there
are
illegally.
in Florida, you
Gotcha.
need to be legal, meaning you have to have papers.
We ain't moving
And
to
if
Florida
you're
anytime
So if you
illegal,
don't, you cross over to Georgia.
if you're illegal, get out of Florida. Basically, and this is
And
something
whatever
that
has
passed
happened-
in 2023, and I don't think a lot of people knew about it, but it's now being enforced. And that's how this guy ended up getting caught up
Gotcha.
in this.
Okay.
So those comments, everybody, those comments.
Yeah, let me
There's
read a
some-
few
we need
comments.
Kama
we need-
unaenda Florida na una makaratasi.
we need to talk about some. I
Yes.
need to shout out a guy over there.
Yeah,
because-
so some comments were coming in here when we were having these conversations. Atieno says, great point, Omosh. We came here by ourselves. This was a little while back. Stephen Batty says, my kids are learning, but it's hard. Their impulse thinking hurts them, but they are young and we have to try to keep them focused. Eunice Smith says, this is so true. I see people who wear LV, Gucci stuff. They pick up shifts just to show off. And then Lawrence Kihanya, Babahanya says, when Mike Cuke was suspect, sana. And then
Mike Cuke was suspect.
And then Eunice says, that's very
Go
true.
drying, Lawrence.
That's why they buy
Let's
their
go to
houses. That's why they buy their houses cash. I think that was when we were talking about
That's when
owning
like
homes.
when guys like Omosho was talking about people put their monies together.
Yes.
Yeah, that's how they buy it cash. Yeah.
Yeah. And then Apa Babahanya says, Moya and his cronies ruined us. We were customized, kila mtu ni kujitegemea. Try to come up with a group, it hits a block. And then Apa Muzi is asking us. whether to go
Muzi!
live. So I don't know. And then
Muzi.
Patrick Chabeda nasema timely topic, great conversation.
Now let me say this.
Yeah.
Patrick Chabeda was my head of house. Ile shule yetu kubwa.
Okay.
Haya, you are his
Big up,
nini?
big up. I was his mono.
You are his
Yeah.
monokoti leader.
I was his mono. Patrick Chabeda was my head of house in Nairobi school. Elgon.
okay.
Big shout out to Chabeda.
Alikubuli.
No.
Aya,
This
Ska-
guy was good. Chabeda was good.
Unaona jana watasema.
No. If I was
Haezi
hustled,
sema
even
gani
if you
kwa
are- even if
bure,
you're hustled,
nikienda
guys
bure
don't say-
mkubwa
no.
Baltimore.
If I was
Guys,
hustled, I
don't
wasn't
say.
hustled. I wasn't
Aya,
hustled.
wacha tumalizie hizi comments.
Nonsense.
Hapa Liz mean Steve Roy anasema sadly the days of voting in ethical politicians are gone. It's not just Kenya. Look at what is happening here.
Umepita Skylar Roberts.
Oh, Skylar
And
Roberts.
they were including those countries like Mali, Niger, Burkina Faso.
Oh, that's the Sahel.
Yeah, Sahel,
Yeah.
yes.
And then hapa Liz anasema tena Christian DJT supporters will excuse away his bad behavior by saying he who is without sin cast the first stone, but never extend that same grace to Biden or Kamala.
100%.
And then
I love that.
Baba Anya anasema all what is happening is well articulated in Project 25. How many Americans read it before elections?
Not many.
No.
And then Stephen JJ alikuwa anauliza about the Uber.
That's
and
what Micah commented
Stephen
on.
Barton anasema now that's why they want to remove the birthright issue. Yes, so now because time inakaribia sana, you know, like we've talked about so many different things. Mwaura, housing.
Yes.
What would you know, like, I mean, I know you're in commercial lending, but at this point, what would you advise someone who is thinking
Who's
of
in the
buying a
market
home?
for a house?
Yeah.
It becomes extremely personal. If it was me, I'd say rent. Don't buy.
Wow.
Why? Why
Right
would you
now,
say that?
the way the valuations, they're too high.
They're not valuing.
They're not valuing the way
Yeah.
they should
So
be.
when you say the valuation, meaning what you would
They're-
end up
they're too-
purchasing it for.
Yeah, the numbers are too high, and then I'm charging a ridiculous interest rate. So what does that mean? A house that was valued at $400,000 last year is valued at $600,000, and then your rates go from 3.75 to 6.75. Right now,
So you're losing every which way.
Whichever
You're buying
way.
it for more
You know-
money and you're paying more for it.
correct.
And the price of the home, that is locked for life. At least
That's
the interest rates, that can change.
It can change.
But the price of the home is locked for life.
As soon as that, the last time we saw a reduction in a drop in property valuations is probably the early 80s in America.
No, we actually saw that after 2007.
2007
was
was
brief.
market based.
It was, yeah, it was,
Yeah,
yes.
2007 was
It brief.
extremely
brief.
market
Yeah.
based. Where are you? Where do you live? So I'll give you this one. You're absolutely right. In Arizona, Phoenix,
Yeah.
right, when Micah was living on that side of the world,
Yeah.
yes, because they went and overdeveloped, and then they left these developments that were naked. Come to Maryland, right? To me, it doesn't make sense where I see economics are not there, and then they're building new developments, and the starting price says $750.
Yes, 800.
Oh, 800.
Yes, 800.
Right?
And
Yeah.
you're sitting
So-
on, what was it? A half acre? Ile tulipita
Oh, yeah, it was
from my place. It was 800. right?
800,000.
So-
800,
Yeah.
right?
So
Half acre.
800,000.
But
with-
they removed
with-
the career, the sign.
So even with 800,000, so let's put 800,000, right, on a monthly
Yeah, but
mortgage at
that's
800,
starting. It's
on a
starting.
P&I
Yes.
with taxes, you're somewhere at $8,000 a month.
In Germantown, where I live,
Can't afford that.
There's
How
$1
are you
million
paying
But
that?
homes.
who's making that kind of money? Oh, sorry.
yeah, in Germantown, where I live, there's $1 million homes.
Yeah. So
Yeah.
$1 million home.
You know, the
once
funny
again,
thing is-
$1 million home, your mortgage is $10,000 because you have to add your taxes onto it, right? So on a monthly basis, right, it's zero. Before you turn on your lights, before you do something, before you take a poop, you have to write a check.
Surely. You
For
even
10
added a poop there.
I had to. I was gonna say something, but I was told not to curse.
Yeah.
You know, but
10,000
it's
is quite a bit.
$10,000,
Yeah.
right? And let's put it in perspective. How many people, couples, that's not one individual, couples, are bringing in where they can
Collectively.
spend collectively, they can write a check for 10 grand
A month.
a month.
Yeah.
Yeah.
That's
that-
your
that is too
zero.
much, yeah.
You remember, you haven't paid anything.
Yeah.
And then you add on your kids and you add on, like, I know how much my house costs. And I'm like, oh my God. And it's nowhere close to that.
Yeah.
Right? So that thing, somebody, if you ask me if I was 22 years old, if I even though I was 35, I'd be like, man, just rent. Go get a bougie place for $2,500.
But where are you
Right.
getting a bougie place for 2,500?
Listen, Baltimore, you could be right by the harbor, in the inner harbor, and you're not in the hood for 2,500 and 2,000 square feet. Right? And it's once again, it's what's your lifestyle and what you do. So
Yeah.
I like Germantown.
Yeah.
I work hard in the city, but I like to go home to
suburbs.
Chicago, to the
Yeah.
burbs,
Okay.
right? To the burbs.
The burbs.
Yeah.
Semusha, go burbs.
Yeah.
Burbs.
I go to the burbs, right?
Yeah.
Because things quiet down. Because I live in a hectic life, right?
But Germantown is not that quiet anymore.
Well, they're moving.
That changed.
Yeah, Germantown
it's
is
changing.
changing.
Yeah, it's changing.
Germantown,
It's-
Gaithersburg, all these
Now you
places.
have
Blacksburg.
to
Yeah,
get that.
it's
You have to
changing.
go to Frederick, not even
Even
Clarksburg.
Frederick,
Frederick, even
Yeah, but
Frederick.
Who
it
told
was-
you Frederick is
Even Frederick is
No,
out
no,
of control.
Yeah,
No, well-
totally out of control.
I mean, when I'm doing a comparison, I'm saying you have to go to Frederick if I'm doing a comparison with with the other
Germantown.
side,
Yeah,
right?
yeah.
But
Come
you're
on.
right. In fact, you have to go past that because you are right in a burner, right? And you
Right.
saw it for
The
yourself.
other day, I saw it
yeah,
the other
the
day.
golf course
Yeah.
places and everything.
Yeah.
Yes.
And even Hagerstown. They're all the way in Hagerstown.
Hagerstown is
Yeah.
no joke. When I first moved to Maryland, I was like, Hagerstown. I can't afford Hagerstown right now.
No, it's not.
Like to me, like time,
You
the
really,
valuation.
at this point, West Virginia is what you're looking at.
you might as well
At this
live in
point,
West
you're
Virginia.
looking at West Virginia.
Oh,
if you're
go to
going out that side.
Pennsylvania.
Yes.
Yeah.
Just
Or
cross over one highway
Or,
up.
or rural
Past
Virginia.
York.
Oh,
past
rural
York.
Virginia.
Rural Virginia, yeah.
Yeah, you're
Right.
gonna have
So
to go
when I
past
was in
York.
Urbana, I came down to come to Virginia. So I come down. I was like, you know what? Then that's where that's where you have to go to, or put me to the Smoky Mountains of Tennessee.
But do you think this is sustainable? Because now we are talking of a situation of a whole generation that's not going to be able to afford housing.
It's not sustainable. When is it going to be fixed? The next question, don't know.
Wow.
Like we right now we're living in such a crazy world that we don't know how to. Like I used to be able to bet on things. Like I could figure things out ahead of time. In today's world,
You don't know what's going to happen next week.
because you wake up in the morning, the president says something about iPads, and the next day, listen, I met this guy from I was telling OneMic from the SEC Securities and Exchange, or even UDAMO, Security and Exchange Division. Think about this: stock market drops 2,600 points,
Yeah.
and we talked about this earlier,
Yeah.
and then comes back. Those guys made $1 trillion. Not billion, trillion,
Yeah.
right? But unless you're in the club, nobody got that. I didn't get that. You didn't get that.
Yeah, because you don't know what's going to be announced.
You don't know what's going to be
Yeah.
announced. But his cronies were making money like there's no tomorrow. So it's
Market manipulation.
is so crazy.
Yeah.
And you can't charge them. So real estate is built on people's feelings. Right? How do I feel?
Okay, I know we're running out of time, and
sorry.
I have to ask this question because like somebody was asking, what is the difference of banking with a local bank vis-a-vis a national bank? Like you have a Harbour Bank vis-a-vis Bank of America or Chase. What is the benefit of local banking compared to national banking? But I have to ask that question so that I don't get hammered.
So
Micah
with
Mwaura
community
Muroki,
banks,
service.
you know somebody. You know Mwaura Muroki.
Yeah.
And in a community bank, decisions are made local. So I'll give this one because I don't trust them because they're snakes. Toronto Dominion Bank. So if you bank with TD, depending on dollar amount, your decision is made in Toronto.
Oh, TD Bank, the one in.
Toronto
so-
Dominion.
We have one
So-
in Germantown.
right?
There's one in
TD's,
Essex.
TD's Canadian.
Yeah.
Yeah, I just thought it was.
it's Canadian.
I just
It's a
thought it was.
I
Canadian
thought it was a
bank.
Philly bank.
I just thought it was TD.
No, it's
Toronto
a Canadian.
Dominion.
I thought TD Jakes had something to do. Okay.
Yes.
No Diddy. And then and then if you take used to be Sovereign, I can't remember who they are. They're Portuguese bank,
Oh.
right? One of the biggest financial institutions. Right?
But let me ask you, how does that matter to me? I just have a checking account. I go withdraw my money.
So
on
if you're
ATM.
small and you're a regular person, you
Yeah.
want to build a relationship. You want to know that your decisions are made. Like I'm not gonna just push Harbour Bank. When I used to work at Valley National, when I used to work at Fulton, right? Valley National, the decisions were made in Morristown, New Jersey. When I was at Fulton Bank, they were made in Pennsylvania. And Harbour Bank, they're made in Baltimore. So they're local. They know who you are. They know how to work on it. Somebody who's in Toronto does not know what Ali Badawy is doing in
But I'm
Maryland.
asking, So what does that matter to me? Does that mean, okay, so for example, if I have a bad credit score, will Harbour Bank give me a loan just because they know me?
I'll work with you.
Okay.
Work with you. Instead of just saying an automatic no,
Yeah.
I'll work with you. So like things that I do and what's made me and actually what's helped me build my career and everything I've done is because I'm not going to give you an automatic no.
Yeah.
Let's work it through.
You're going to give me a polite no.
Well, it depends. If things are bad, you know.
So are you saying it's more like a community type service where you're
Yes.
saying, okay, we're gonna work with you to build you up to the
Help
point
you.
where we can
Where we
you
can
and
help
where
you.
we can-
and put you in the right path that
I'm
even
gonna
if you
walk you
don't
through.
even if you don't come to us, you'll be in a better off
Correct.
position where you can at least secure even with another facility.
Correct.
If that's
Correct.
if that's what you choose
Correct.
to do.
And in our world, we don't talk bad about each other because we all
We know each other.
correct what he said. We all know each other, so we work in the same circle. So I'm not going to trash somebody else, but I can tell you how things can get easy. Easier is where you can walk in, you know the branch manager, you know the commercial loan officer, you can talk to the senior VP, you can talk to the CEO. Right? My CEO is named John Lewis. You can come find us at 25 West Fayette. The chief banking officer's named Stan Arnold, and the VP's named Mwaura Muroki. Look at God. 2 claps and a Ric Flair.
That's how the guy sells to those chaps over there, in those corners of Baltimore that have the blue light.
Yeah.
And they have funding.
So, and then the one last thing I wanted us to talk about before we close shop. With all these job losses and all these issues happening in the US and the inflation, do you think this is affecting how people are sending money back home?
Oh, absolutely.
Diaspora remittances.
Absolutely.
Okay, and
And
why is that?
especially in the DMV area. Especially because we're seeing it. Remittance. You can't sell what you're not making. Facts. Reduction in income that's coming in. You can't send what you're not making. Right? And we used to make a lot of money. I compare to 2008. Right? Remittances, people sending money to places abroad dropped in 2008 because we were all getting laid off and things were going sideways. That's what we have. The biggest problem I see this is because private market created 08 and even 2020. The government is one that's creating today. So we have no bailouts.
So it's self-inflicted.
Self-inflicted. The government can't come and bail us out.
So it's almost like it's like all the things that Obama did to hold everybody up is thrown out the door. The baby's been thrown out with the bathwater.
Exactly. Nothing.
Doing a maji out nature.
There's no help, right? The only
it's
way
not
we're
help
going
is
to
not
fix
coming.
this is not coming. If everybody's waiting, no, there's not going to be any bailouts. There's not going to be any of these shortcuts, checks that people got. Not coming because the guy who created the problem is the one who's taxing you. He's the one who's kicking you out. And he's also the one who's adding tariffs and everything.
And so, in essence, what you're saying is that the adage of, you have all these things where you let's say you have a home, you have a mortgage, you lose your job, right? So there's different options that are given to you from Obama's time, right? You had deed in lieu of foreclosure.
Yep.
You had, I guess, the
Hump and
forbearance.
harp.
You had
There was hump and harp.
There's what else? Remodify or modification,
yeah.
right? And then there was, I think there's a fourth one. But those 3 were put in place in 08 specifically, right? So, and now there's another caveat that I found out the hard way, shock on me, is that whoever is investing in your mortgage has say on how they treat you when you default.
Correct.
Because they quote unquote set the rules, regardless of all these other federal things that are put in place and also at a state level to protect you so you don't get to lose your home, which you could even go file bankruptcy, blah blah blah, right? And bankruptcy is always one of those that one would say this is it's the bullet, the silver bullet that you have, and if all else fails, then go with bankruptcy, right? But
that's
try all these other things first to see which one works. But this investor who you never ever knew existed, you only find out they exist once you go back to your mortgage provider and you say, hey, I'm having problems. and how is it that we can work this thing so that I get to keep my home? And they tell you, well, our investor has said at this point you don't qualify for any of the reliefs that are there, except if you want to do a deed in lieu of foreclosure, where basically you're signing over your home.
So
That's why Omosh should get a halal mortgage.
yeah.
I don't know even whether Mwaura knows about that.
No, but
halal mortgage, you never kick anybody
so
out.
here's the thing.
Yeah.
Omosh bin, I'm not Muhammad. How will I get it?
No, anyone can get it. When you go to a store to buy halal meat, do they ever ask you whether you're Muhammad?
Again,
So it's the same thing.
Again, I don't know what the rules are for halal, and maybe for the,
No, it's
for
the
the
same
halal
thing.
loan, and maybe
They
these
never-
are,
no, it's
again,
it's
these
for
are,
everyone.
These are good things to discuss.
So that's a great question. So
yeah.
like in terms just touch on what you just asked, right? I can give you a very hard answer. It's like you're stuck because the day you close your mortgage, whoever you close your mortgage with,
correct.
it was sold.
Yes.
And
they
somebody else.
Yeah, they sell it on the fly. Yes.
And somebody
Yes.
else is the one who's the investor.
Who's the
per
investor,
se,
yes.
Right? And who you close with, they get a service fee. That's all they do.
Correct.
So your
They're
bill will,
servicer, yeah.
your
Yes.
bill will say Chase Manhattan.
Yep.
But you know, Nyakangwa is the one. Nyawudie is the one who
Yes,
has
with
it.
a, yes,
yeah.
with 100.
And,
Yeah, he's got his 100 million sitting over there.
In somewhere in Phoenix.
But when they buy the mortgage and the buyer is still bound by the contract, by the original contract that was signed.
Yes, they're bound by the
Exactly.
contract. But remember, the rules of engagement for when you default are not necessarily spelled out
Yeah.
because
No,
the federal laws. Okay, go ahead.
No, those are spelled out. That's
No.
that's
When I'm saying the rules, I'm talking about you have defaulted. Okay, so it means that you either have to pay, or then you use these 4 options that
Right.
we've been given. Right?
Right.
But the lender, not the lender, the investor in this mortgage says, well, I'm not comfortable allowing you, I'm giving you a forbearance.
Okay.
You
gotcha.
know,
Yeah,
I'm not
that's a
comfortable
good one.
giving you remodification. I am not comfortable giving you, I guess, a refinance or whatever you want to call it.
So
I just want you to give me the deed, or I foreclose.
So that becomes very touchy, right? So let's say things go bad. Nyagodi goes bad,
Yeah.
and stop looking at me. And the bank is coming to foreclose. It has to go
Correct.
to open market.
Yes.
Right.
Yes.
So it cannot be a deal. Has to be open market, right?
Yes.
So even when if a bank is foreclosing on you, has to be open market. Has to be a sale, a share sale,
Yes.
open market.
Yes, it goes through.
It
the
has
whole
to be.
thing,
Can't
yes.
be at the you owe me $100,000 on a $500,000 house, and we're gonna sell it for $100,000. No, you put it in the open market.
Yeah, they put it up as an
Oh, in
auction.
the open market.
Yeah, people come and
One-
bid on it. Yes.
One significant difference between like halal mortgages and non-halal mortgages is that at the very basic is on late fees. So late fees are capped at $50 because the late fees are capped at how much it costs to try and call and recover. So they're capped at $50. Number one.
Can I refinance my house with you in a
So-
halal mortgage?
So
He
so
said
number
anyone
two,
can
no,
get halal.
anyone.
No, I'm joking, but I'm just saying.
And there are so many halal mortgage
Yeah.
providers. Another big one that people never see, because the way the contract is structured, because we are interest is forbidden. So the way the contract is structured, it's structured as a rental partnership.
Gotcha.
Yeah, which is called musharaka. And when you think of the Swahili word ushirika, it comes from the Arabic word. So it's a rental partnership.
Partnership, okay.
So meaning, for example, if it's a $500,000 home, I pay 20% down payment as the person who will be living in the house. I own 20% of it.
Right.
And then the so-called lender
Gotcha.
pays 80%.
Yeah.
Now, the monthly payments that I'm paying is the rent, and I'm paying it plus a profit.
Okay.
So that profit is supposed to be shared because I own 20% and they own 80%. But rather than take my share, I give my share to the lender. So now my partnership, my equity has increased from 20 to 21%, and it
And
goes
as
that
you keep paying,
yeah.
You-
So it's
your
called
equity.
it's called a reducing partnership.
Yeah.
Now, one key difference is, in the event of a foreclosure,
Then
a profit or a loss is shared in the proportion
across.
across the board. So
and whatever your percentage
whatever your
was.
percentage is. So
Right.
if we are at 50-50 by the time I'm going on foreclosure,
Okay.
whatever is generated from the sale, if there was a profit, we share 50-50. If there was a loss, we share the loss 50-50.
So the Hasidic Jews have something similar.
Something similar, yeah.
Very, very, very cousins, right? And they're the worst. Never mind. That's my opinion. So, but they have something very,
Yeah.
very, very similar to
So
that.
what do they call it? A kosher loan?
It's funny.
I had to try.
I'm not gonna
I
lie.
had to try.
Yeah.
That was a good one.
It
That
was
was a
good,
good
right?
one.
Yeah. But that's it. This is interesting that we have all these vehicles that people
No,
don't
and by
know
the way,
about.
these are open for anyone.
Yeah, and the
Yeah.
thing is, if you know, like somebody said the other day, we're trained, right? And I think somebody said earlier, we're trained. This is how you have to run. If you do enough time to research, like I'll give you guys this, in the state of Maryland, if you really you're starting a business, you're trying to do something, do research. There's a lot of vehicles that are gonna help you run your business. The Maryland Business Opportunity Center out of the University of Maryland over here in College Park. They will put you in connection with everybody that Governor Moore is putting. He just said the other day he put $25 million to go to small business creation, but it's going out of the MBOC. Right, hit those guys up. Do research. If you're starting something, it doesn't matter. Even if you're just making chapos, do research. Somebody's gonna give you money.
Yeah.
But you have to put the time in, right? A lot of people, we try to look for success very fast, right? And before we run down, when you start in and you're trying to run a business, don't look about profits. Just make sure you don't lose money.
Yeah.
In other words, go to Harbor Bank, see Mwaura Muroki.
Right, and come find, but don't lose money. Don't look at top line. Always worry about your bottom line.
Yeah.
As long as your bottom line
Make sure
is
you're
not-
breaking even.
Correct. As long as you're breaking even, don't worry about how many things I have to do on the top line. That's going to fix itself
Yeah, with time.
with time.
Yeah.
But the bottom line is where you really have to. And thank you guys for having me. I really appreciate it. It's a great
Okay.
conversation.
Okay.
Wahenga walinena kilicho na
Was
mwanzo
Mikasi gonna say something before you hang up? I had him kohoa. Okay.
Tuhenge.
wahenga walinena kilicho na mwanzo hakina budi kuwa na mwisho. Meli imetia nanga. We are about to wrap this puppy up. Mika, ouch! Gabe, tugende.
Anyway, I want to say thank you to Mwaura. Thank you for gracing us with your presence here. You're a very hard guy to find on a Friday.
Yeah.
And when I looked for you, he was going to piss you off, but I gave you options.
Yeah, you did.
And you chose. Yeah. So thank you for joining us. Thank you for gracing us and sharing your knowledge. And you can leave your contacts here if you want people to contact you for advice and also customers to get some financing from you. But all in all, I want to thank everybody who joined in today. Today we've had some old listeners coming back. Bali mlikuwa mmepotea, mko mnakuja kuja, bado tuko tu. Na sisi wa boring. Tuna story poa. So it was nice to see you guys. Thank you for coming in. Wa kawaida wachangiaji, grateful for you. The weather is good. People are going out. Remember, if you're out and you're drinking, don't drink and drive. An Uber is cheaper than a DUI.
Amen.
Have fun. Stay blessed.
Fire!
Wow. Asante Mikasi, as usual. And for those who don't know, LA7 is coming. And that guy with ati Jazzy number gani?
Nambari 7 mgongoni.
Yes.
Jazi ambayo imechanuka.
So next week we are actually going to be breaking down rugby. Ama Mikasi,
Yes.
vitu zimechange, tuko hapo. For our LA7s, I'd say party seekers, rugby. Yeah, I think it's rugby first. And I think we have the Challenger series, right? The men and the women.
And the women, yeah. No,
Right.
the men are in the they're in the but they're
Yes,
fighting to stay in the
they're
main
fighting
cup.
to stay in the main.
Yeah.
And then
The women are fighting to be promoted.
So both the men's and the women's team. This is
Yes.
Ali. Have we ever watched them
Never.
together? We've
Never.
never
Both of them
watched
are
them
playing
together.
a Challenger Cup.
In the US, never.
Also, it's both Challenger Cup. It's considered
Yeah.
Challenger Cup, right? But yes.
Yep.
So we've never ever watched them together, and the
Yeah.
women are
in the
awesome.
US, never. Yeah.
Man, the women are awesome.
They're amazing.
Whew. the women are awesome. So if you're a rugby fan, start getting. Hopefully, you've already by now bought your tickets. If you had followed, normally Ali already has a program where he has broken it down and he has shown you these are the hotels to go to, these are the bed sheets you need to sleep on, these are the
Egyptian
I said normally. I said
You
normally.
did say that, you did
Yes,
say
I
that.
said normally. So, with that said, if you had not done your research ahead of time and you're still waiting for Ali to tell you how things are going to go na Southwest Sikuizi sijui hakuna free bag, I don't know how you're going to get there. But you could still plan. Bado iko time. You have a week or two. So, see you guys next week, Friday. We'll be breaking down LA Sevens, probably the rugby game as it is now, and where we go from here, as well as if we don't make it, what happens, and just the state of rugby in Kenya. We have hope. We've seen some sparks, and we were this close to picking up in Singapore. So I'll see you guys next week. Enjoy this weather. The weather seems to be breaking out somehow.
I think it's going to be 80 for tomorrow.
Oh my goodness. And to my brothers over here in arms, Asanteni, Mwaura, thank you very much. To our fans, thanks as usual. We wouldn't be here without you guys. Have a good week.
All right. Thank you, Sana Omosh. Mwaura, give us your last word.
Oh my God. Thank you guys so much. I've been a big fan since the beginning. I always remind OneMic, he's about to say it right now. When he found me one day in a park in July back in was it?
I think it was 2009.
2008, something like that. 7, 8, 9.
7,
Yeah.
8, 9,
And he asked me, yeah, say your name. I was like, my name is Mwaura Muroki. He said, Mwaura Muroki, like an old Jewish lady.
It wasn't me, it was him saying, Mwaura is Mwaura Muroki.
Yeah, so no, I want to thank you guys. I want to also thank everybody. I want to thank my family, Shiko. Auntie Naomi, happy birthday, because you're sending me text messages. Happy birthday and big shout out. So don't say I do nothing. And Ali's not going to sing happy birthday for you right now. He's busy. He's working. To my mom and my dad and my brother.
Whose birthday is it?
Whose
Naomi.
birthday is it again?
Naomi Gadai.
Allah, it's Naomi's birthday.
Today is Naomi's birthday. She turned 25 today.
Okay.
Allegedly. So give her
okay.
She'll be happy if you say happy birthday.
Okay. All right. Happy birthday, Naomi.
There you go. So to everybody else and the entire people who support me, thank you so much. And once again, you guys have a great platform. Whatever in doubt, double down, right? Just continue to double down. My biggest quote is, whenever in doubt, double down. So thanks again, guys.
All right. Thank you so much, Mwaura, for coming through. This was a topic that we've been willing to talk about with all the shenanigans that has been happening all the year. We weaved back and forth, from what's happening in the economy to what's happening in our families to so many other things. And we really appreciate it. And here, Esther Mulusa says, great show. I was a bit off, but it is because I thought we were talking about the tariffs. Yes, we did talk about the tariffs, and we talked about so many other things also beyond the tariffs. Now, next week, we are going to be talking about rugby. LA Sevens is coming up. We still haven't confirmed, but we are hoping to have Konye.
Orewa LA.
Yeah, so we are hoping to have Konye on set next week. And there's so much to talk about rugby with both the men's and the women's team coming to LA. This will be very exciting. There's always shenanigans that happens with the entertainment side. I think we're also going to talk about that. And of course, our platform is open. Anyone can call in and tell us what they need to say. So next week, it's going to be all about rugby. And then next week also, the Boston Marathon is happening.
Whoa. Opening day?
Yeah, it's the Boston Marathon.
So Boston Marathon, opening day in Fenway. That's how they work together.
No, but Boston Marathon, I think, is on Monday. It happens on a Monday.
Yeah, that's the day. That's what they do.
Yeah, that's right. Yeah.
But
You're both talking about the same thing.
Yes.
Yeah. Yes. They open the same day. Red Sox and Boston Marathon. Sorry.
Yeah, that's right. Yeah, so, like me was watch baseball, so forgive
Not American.
Me. Yeah, not American. Yeah. So
but you'll watch around us.
Yeah. So. Yeah. Yeah, so I think, you know, like it will be
Napenda
important
kudodge ball.
for those who will be able to watch it. Make sure you watch it. Last year we were there. Last year we were there in Boston. This year we were not able to make it. It's one of those things which I don't know, you know, like for some reason Kenyans have not embraced the marathons, yet we win them all the time. Yeah, you know, I don't know
I
why.
think nilikwambia shida ya marathon ni kwa sababu ya day ile day iko hiyo Monday.
It's on a Monday.
I was on a Monday.
But
Ingiani na dunda.
But New York is on a Sunday.
Monday ingiani na dunda.
A Sunday we can negotiate.
Mika, New York is on a Sunday. New York Marathon is on a Sunday.
Yeah, New York sawa, yes. New York is a
we can negotiate
Monday,
New York,
Sunday.
Yeah.
New York
Monday.
Shida ni
Right.
hakuna mtu tu mwenye amesema ametie dunda to New York. If somebody tied dunda to New York,
people would show. All right, anyway, you know, like hopefully people will start going to watch these marathons. Na kwa hayo machache, yote ambaye anataka kunipigia simu, nambari yangu bado ni ile 1-800 mteule. Na operator akishika simu, mwambie unataka kusema na mjukuu. Na akikuuliza ni mjukuu yupi, mkumbushe ni mjukuu yule wa Masai. Because I'm Kenyan by blood, American by design, Masai by choice. Sichagui, sikagui, na sibagui. Kwaherini.
Asante sana, Mr. Mwaura Muroki. Aiden, daddy loves you. Njeri, daddy loves you. Nemo, daddy loves you. Oh, by the way, Shiko, thank you for giving homeboy a lift pass. Asante sana. Shik's not kapienga. Until next week, be blessed. Why are you giggling like that? Until next week, be blessed. Shik's kapienga. Not.
Kagenda ni coffee ndio ilipeana nini? Pass ilitoka from coffee.
Big ups to Coffee and Kyra.
Aya, kaende.